now. It's at around 4,500.
Gold getting shanked this morning. There's more going on than that, though. We're going to start the show early today.
Traders, time to roll. Numbers shaking down the scroll. Clock is ticking, you already know. Welcome into the stock market show. Oh, yeah. Monday to Friday when the floor is live. Captain Jim James, help you cook.
Yeah, there's a reason for it. I'll explain it this morning. I saw what you just said here. So we're opening this downside.
Charts are jumping, green and red gold. He's steering this ship on the stock market show. It's a
We
show where the bulls run wild.
if you remember the
Play low from the first loud bell till the closing.
are we good here? Are we on?
That wave on the stock market show.
All right, good, we're on. We're going to start a little early this morning because we need to chat about
15 a.m. Eastern Time. Next rate decision for the ECB rate decision.
one door opening and another door closing.
Straight goes, he's calling the shots.
Interest rate forecast for no change at 2.15%. We also get the ECB rate statement with this as well. So ahead of this, we're looking at a note.
I have bet in here that the Bulls are having a hangover morning. They don't want to get out of bed.
The ECB officials broadly concurred
We're going to get out of bed, though.
a negative supply shock for Europe. Members on the government particular attention to the
Check.
but cautioned that it was too early and that the situation was too volatile to draw reliable conclusions. Policymakers also focused on the risks of a second round effect. In that respect, Goldman Sachs say that the executive board member Schnabel stated that while the 2022 inflation surge had left certain scars, the stance of fiscal and monetary policies were less expansionary now. So they said there's no rush to change policy now after war.
Check 1, 2.
Should keep a cool head and would avoid hasty conclusions and was in no rush to change policy. Bundesbank President and ECB's Nagel therefore backed. That said, ECB's President Lagarde and other officials.
Ah, shoot. Oh, my camera's on. Cool.
Everything necessary to keep inflation.
Turn that off. We don't need to listen to that guy. Oh, sorry about that. Hold on here. My chair's not cooperating this morning. All right, so what do we got going on here? I came on the show early this morning for a reason, and we got to chat about it. So let's take the title of this morning's show is opening one door, or opening a door, one or the other, and closing another door. And we got a lot to go over today. A lot. So let's start with this. We have 1 day away from quarterly OPEX. We're being sucked into the vortex of quarterly OPEX. So you've got like the end of the quarter's been negative. Everybody knows that. We're being sucked into that negativity without any escape. And we're actually opening a door way much lower. And as that door opens and this quarter ends, there's only one more step to close the door above. They closed the 90s, then they closed the 80s, and now the 70s are being closed, actively being closed here. There is with that doorway this morning being opened, now this could be taken as two things. Like max pain to the downside, like just put the screws to you. And this could be the bottom, legitimately. This could be the bottom. But it's probably not. Because we're opening this door to the next 3-month candle from 2025, October, November, and December. And we are trading right now the entire trade from September 17th. If you remember when we talked about September 17th and distribution off of that trade, it's normally called, I'll explain it here this morning, but normally what happens is we hit a top and then we start the process of distribution. In the pump up in that distribution, I forget what it's called right now, but it's like I think it's called they call it like a FOMO pump or something, but it's actually distribution. So this morning we're actually trading that FOMO pump right now, and so we are opening a door to trade the next 3-month candle from the middle of 2025. And that doorway goes all the way down to like 6,000. We don't have to go down that deep, but that whole area is now wide open. So it's just a matter of closing the door above at the 70s, and we're going to party to the downside. It's pretty big. So we are experiencing a trend change, major trend change in the stock market. The door for trend to go down into this new trend down is wide open as of this morning in pre-market. Now, closing the door above is the last piece to the puzzle to begin trading whatever's down below, the 50s, the 40s, the 20s, 6,000, and actually even lower. Now, the lower is a very low probability at this point, but it is open, like 5,600 wide open. 5,600 is wide open right now. I'll show it to you this morning. So, and I'm going to give you some other stuff here, some other data and stuff. Some other data and some other news that's coming to light the past couple days. So this morning I woke up and I was reading some news stories and the implications of fuel. I put this in a brief last week where I said, hey, we're going into the weekend. You should begin to expect news upcoming this week we just had, where things start breaking. And then by the next weekend, which is this upcoming weekend, and the weekend thereafter, the news should get worse and worse and worse and worse for what really matters, which is fuel. And I know that I hear a lot of nonsense like, think about the fertilizer, think about the people being fed, and I don't have as much concern with that stuff. There'll be greed in there. Of course, like I'm gonna jack up the prices of fertilizer, and you're gonna pay for it. But in reality, there's enough food to feed the world 2 times over. That's how much waste we have in food. The real danger is not food; it's diesel fuel for manufacturing, and its related things like flights and trucking and machinery and all the other things surrounding commerce. Now, I know food's commerce too, but not like this. So this morning I woke up to a bunch of news stories. Like last weekend we come back over the weekend. The first shoe to drop was, hey, we're gonna ban the export of jet fuel from China, from I believe Laos, or maybe it was Laos and Vietnam or something like that. And more importantly, Korea and Japan, they're like the 5th and 8th largest economy in the world. That's what they are. They're the 5th. I think it's the 5th and 8th largest economies in the world. They're feeling it right now, even if they're not making it publicly known to you. And it's all about this sour crude that comes out of the Strait of Hormuz and is refined into products to run the beast that is the economy of Asia. And this morning, I'm reading news stories saying, hey, I'll even read it. It's like, hey, everybody's sleeping on this. Why is nobody paying attention to this? And it doesn't matter until it does. And it's going to start mattering. 80% of the fuel, refined distillates for fuel to run the machinery and the machine of Asia is being choked out at this point. And things will start breaking. We're not, and they have savvy things they can do to limit, the usage of this fuel that's being constrained. But it's very negative for the world economy, and that does matter to the United States. You might be looking. I think yesterday I said to you, you look at your phone and you're sitting here looking at your phone and you're like, hey, this beautiful thing is made in China, but the other small little parts that are in there, they're not made there. They're made in places like South Korea, Japan, Laos, Vietnam, all Philippines, you name it. Like we have this whole manufacturing of, that a complex machine, one small part can break it, and it might not be your baller sexy chip from Taiwan. And notice too, you don't hear anything from Taiwan. You don't hear any, like all these big economies are very hush hush about this right now. So what we're gonna do is we're gonna take a look at. Here, let's go over here. We're gonna do this early because I want to show you this. There's not much to do here today. Tomorrow there really isn't a ton to do. It's gonna be kind of boring. We should be trading like sideways and down, pinning into OPEX. No, you're not gonna get a crash. None of that's happening. We're gonna get roped into OPEX. And while we're doing this OPEX thing, let's take a peek right here. This is the importance of the quarter. This quarter began getting quite bearish here on Jan 27th. We had some distribution, but the idea here was, sorry about that. The idea here was as long as the bulls can hold 680, they'd be fine, right? So you can have some distribution. Let's look back over here. This is, I believe, the 27th, the 28th. This is the end of January. And the idea being that we were already expecting like distribution down in here, but this would be held, right? All this would be held, even a bounce down here, no big deal. Everything's fine. But we're now at the end of the quarter, right? We've got January, February, March. That's one quarter. And all of this bearishness over here and this Iran stuff, right? All this Iran stuff over here that's not a 3-day operation, not a weekend operation, grows larger and larger, and the hedging gets more active and more active and more active. And now what we're doing here is we're seeing this through into quarter end. Now if we didn't unlock this one right here, there's still a little bit of hope in here that that we can go even higher up here. Let's say 680. But this unlock right here is not. This is not that 680 nor that 690. This escape up here at 690, 680. What's actually happening is we're closing 670. We're closing 670, and what we're doing is we are unlocking 6,000 right here. So you get roped in over here. There's your 670 right here. This is your daily trigger coming down, and we're going to crash. Now we've opened the bottom door, right? We just need to close the top door. It's like the last person closed the door. This is, you can see it right here. The door to 6,000 is now open. And now it's just a matter, like top line, it's just a matter of closing this door right here and beginning a fairly significant trade to the downside. Fairly significant. So the first part is done. We're just waiting for the last part right here, right? Doors now open. Now just a matter of buyer's capitulation, basically. So what you're going to do, I mean, this is the simple way to say it, but basically you're going to trigger a whole bunch of negative flows in hedging. You're going to trigger a bunch of real money selling. And this action right here this price action right here, instead of trying to recover, is going to turn into a whimper. Like, oh yeah, bro, we're buying the dip, and no commitment in it. And this will result in a fairly significant downside move. And I want to, more importantly, I want to talk to you about, let's look right here. Let's look at this low right here. And I want to show you the importance of this low. This is 657.15. Remember yesterday I was talking to you about 656, 657, somewhere in there. This upper white line is really what matters, not the bottom one, but I want to show you where this comes from. And this comes from right here. This comes from way over here. This is important because this is the 2025 upside move. And if you recall, if you watch this show regularly, I had said to you on this date, this date right here, September 17th, you remember this was an FOMC day. And we got some rate cutting going on in this day right here. And what happened was this triggers what's called like a FOMO distribution, basically. So this trade began way down here. Way down here. See if I can put this on a 4-hour maybe and just show this to you. So this is a nice clean way to look at it here. So this trade began in the lows of April. So we traded up and 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 up. And right when we hit the September 17th meeting, right when we hit this is sometimes called a FOMO. It's basically profit taking, but this triggers distribution for this other trade down here. And we're now trading. As a matter of fact, I remember when we were down here, a lot of traders said, "That's it. This is distribution. We're gonna crash." And I was like, "I don't think so, bro." I was like, "This is gonna take like 3 sweeps at minimum." So what happened? How this looks? If you've ever followed like trading or anything like that, let's say we're buying a dip right here. And we're going up and up and up and up and up and up and up, and it's profit taking time. Typically, what you'll see is what everyone considers to be the top. Everyone will say, "Hey, that's the top right there," and that's not what happens. What happens is you get this push. This is kind of well. Let me delete all this here. So you got this bottom being bought, right? And it's accumulate. And let's just say that we kind of know here that this is the top. We're like, hey, this is our expectation, right? Here's our expectation. And we think we're going to, and I think it was in this point where we're at 660. And the expectation for last year's profit taking was 6,800. This is 6,800. Anything above 6,800, if you recall from last year, this was the target, was 6,800. And so anything above 6,800 is kind of like extra, you know, like Jimmy's or like whipped cream or a cherry or hot fudge on a vanilla ice cream. Everything was awesome in here, right? And we came into last year this FOMC. We got the cut, and that cut gave us the juice that we needed to distribute. Now, when we do this distribution, you normally get what's called like a FOMO pump or something like that. I forget what it's called off the top of my head, but what happens is they push you up and over, and then you begin this distribution trade. Normally it's like 1, right, 2, and 3. Usually 3 waves, just like this. And you'll get 1, 2, 3 highs, and you cannot break that plane either. You cannot do this. You can't do like you're up and over. You do 1, right? This is 1. This is 2, and start making new lows. That would be, we're done, one and done. You have to stay on that plane, right? To continue to get that. And the moment you break that plane, you know the distribution cycle is done. And what we're going to do at that point when we're distributing is go back and check the initiation of that distribution. Okay? This is very important for you to understand out there. And when we check this distribution, The reason why you're checking is because of these guys over here. These guys are done, and now it's a process of profit taking, and you want to know, hey, are these guys here? And if we sweep too low, whoop, right, to a little bit lower from like right here, this is the, or that's the 6,600. If they're not here, you start to question, are we going to go to where the last known place they were? The last place that was known that there were those buyers. These are the buyers that bought the bottom. They got us all the way up here. They pushed us all the way up here, and they pushed us all the way up here. So when we look back on, when we look back over here, if you remember I talked to you all, I was like, hey, the September 17th market in your calendar, this is the basis for everything that we're doing. It's right here. This was on that September FOMC. And this began the process of distribution from buyers that are where? Where are they at? Last known place was right here, 507. That's where the last known place is, somewhere down here. It's like right in here somewhere. There's a gap to close. There's a back test to clean up. They could be higher. You know, they might be over here, or not over here, excuse me. They might be not over, yeah, they might be over here. They might be over here, down here. But in truth, this is all open. All of this is open because your last known buyers, they're here, and the distribution point for those buyers was right here. And so if you look at price action this morning on the lows, what are we messing with right now? We are messing with this group right here. This is the entire thing holding the market up. It's literally these buyers right here. These are the same buyers that came in and bought again. They came and swoop, try to bomb it down here. They bought it again. They bought it again. They bought it right here. They bought it right here. They bought it right here. This is a big one. See how big that move was? Boom, one more way up. All right, and now we're coming into seasonal weakness. Like we already know that when you come into the first part of the year, you're like, we might have January, might have February, March would be really nice, all of March to be going up. But even if we extend the beginning of the year, first quarter up, you're still going to get a downside move no matter what. No matter if it takes into April to do, this could be something that's quick. This could be something where we continue to go higher and grind. It would literally blast straight down in April. See April? It would be like vertical to the downside. If we started early, we go nice and gentle and slow down to this seasonal low, seasonal weakness. Now, in this situation, particularly, the real issue here is that we've now opened the door to this down move. And the other danger here, this is the last piece of the puzzle, is whatever this is right here, that would confirm it. We're done. Any rejection at this point above, and you'll see this daily trigger crossing down through the weekly here. This is the door closing. So no squeezing over here didn't happen, breakout. Squeezing over here didn't happen with a breakout. And now you're have unlocked this lower low here. We're starting the process of changing trend. And we're doing it breaking trend into quarterly OPEX and quarter end. So when I tell you, and this is the same for going up. If you're going down, I'll show this in another way here. Let's say major trend was to the downside and we're blasting down. And you come into quarters or monthly OPEXs, doesn't really matter. Let's say that's a quarter there, that's a quarter there, a month. You know, it doesn't really matter, but if you're trying to break out to the upside, let's say we're going down, right? And we can't break out of that trend into, see right here? if you're not breaking out of that quarterly or monthly OPEX, right, breaking that major trend, you get sucked back in, whoop, right back down again. Okay? You try it again, and you're sucked right back down again. So like try it again, sucked right back down again. Try it again, sucked right back down again. Try it again. And what you really need is when you come into these quarterly or monthly OPEXs, you need to escape that major downtrend enough that you can break away in the new month or new quarter. So, where we are right here in this new downtrend, right? You've got this new downtrend right here. You got this nice, beautiful, I'm not going to make this pretty. I'm just going to leave it just like this, right? It's actually higher. It's like that. In this new trend right here, you're not escaping when the quarter is over. What ends up taking place is you come back up here, that door comes straight down, this negative momentum, and you come into the beginning of the month, and it's like dealers are now chasing negative flows. People panic, and there's, oh my God, I got to sell everything, and before you know it, it's down here. It's down here. And the real danger is every time we come into the new month end, so let's say you come into May, right, or the end of, you have April here, right? This is the end of April. If you don't get out fast enough, like if you can't break away enough, you get sucked back in. What happens is you get sucked right back in again to the downside, and you continue this process of going down until conditions improve. Those could be, in this case, it's economic conditions. Now, I did read some stuff about private credit this morning again, and I got to tell you something. If you are out there focusing on private credit is like private credit goes down because of something else happening. Like private credit doesn't come down and then the market goes down. There's no association with that. The market is going down due to other reasons, and that is what tightens private credit. So it's not like private credit goes down, stock market goes down. It's like stock market's going down for another reason, and then private credit tightens. So there's nothing to read about that. You have to focus on what is happening here. And what is really happening here is fucking fuel. Fucking fuel. I'll say it again. Fuel. I'll say it again and again and again. Fuel is this is the worst oil crisis in the United States history and world history. Worst in history. And not only is it the worst in history, you are beginning to see the fuel shortages in Asia begin to impact economies. And until that changes, or there's defined, hey, this is where we are, this is the timeline, or a ceasefire, we will continue this as things continue to break. And private credit will improve once these conditions improve elsewhere. So you can't look at private credit. I don't know. I'm not blaming you guys, but it's everywhere. And it's just pig piling on. Like the reason I'm hyping this private credit thing is because if you were to put a private fucking credit chart up on SPX, it doesn't match. There's no like, oh, private credit's coming down, SPY's going to turn around and have a crash. It comes after. It's an effect of something else. Or I don't explain it. It comes after. I know the word for it. For some reason I can't figure it out in my brain this morning. But you cannot. It's not something that's tradable not in my view, but it's just nothing that's tradable. So don't correlate the two, or causation correlation. Don't correlate the two. It is because of what is going on here in Asia. This is what's going on. It's not our economy. It's other economies. And we will be kept inside of this downward spiral until that danger threat changes. And there's more than likely like, hey, we're not going to tell anybody this, how bad this is, because it does create panic. It does. It creates panic. And if this whole Iran thing fixes itself, hey, we're fine. We're in and out of here. No problemo. And this is a reality here. I can't say that this is not. It's because it's tied directly to the Strait of Hormuz being closed. But you start doing enough damage, and that will ripple through our economy no matter what. So, you know, the doors are opening lower. The top line here is the doors are opening lower, and we're now just waiting for the upside door to close. And you can see it coming down right now. You can see that daily trigger coming down. I want to show you some prior examples of this door shutting and prior examples of when the door is being shut and we escape it. Now, I want to show you one right here. This is the last one. Pretty ugly, right? We're parked down here, right? See that cross right there? Sucked in, and the door is shut, and it's straight down to the depths of hell. I want to show you some more of this right here and prior examples of it just so you can see it. There's one right here where we escaped because we had momentum underneath. We did have this one so this is risk off, right? Risk up, big time risk off. But we did have momentum fairly close in this situation, so we did bounce. Now let's look at where we are with our monthly trigger and see how close we are to it. And we ain't close at all, are we? There ain't nothing here, bros. It's giant no-go. And where is this monthly trigger? This monthly trigger is where that distribution began, right here, right? So are they here? Right? Are they here is the question. And as they open that door, they're lower. They're down here. This is currently 588. This will be up here at 6,000. This will be at 6,000 very shortly, right? This monthly trigger will be up here. Wham, wham, wham. This is May. So this is where the real buyers are. And even when we come down here, we oftentimes will do what? We'll rotor-rooter, right? Take all your last stops, the pain trade, and then we can escape and get out of here. But I want to show you this again. There is no momentum holding this market up. We are far stretched from where trend is. That's actually, we're still like, believe it or not, if you don't know this, this is still a bull market here. This is literally still an upward trend. So this big stretch here, you see that big giant stretch? We could go all the way down here and still be on upward trend in a bull market. Like we literally need to lose 6,000 as of today. We would need to lose 6,000, make new lows to enter a bear market. This is very reminiscent of what? The mid and late 1990s, right? This is very reminiscent of the late 1990s. When you're in a bubble, right? You are going near vertical. And what happens is we trigger profit taking, and we trigger blowing off momentum. This momentum gets so wound up, and what it turns into is a big drawdowns, and then huge, even bigger up moves. Let me explain how this works here. So let's go back to the 1990s. Tight air. Let me show you what these bubbles look like here. Where are we at here? Why is SPX not showing me? Fuck is going on? Oh, it's because I'm on a 4-hour. Hold on here. Hang tight, boys and girls. What I want to show you is this bubble here. And this bubble that we were in back here, I think I've said to you a few times, you're going to get bears that think, oh my God, we're going to enter a fucking bear market. You got bulls saying, oh my God, we're going to enter a bear market. And what ends up happening is we don't enter that bear market. This is 1996. These are like explaining this to people. They don't want to hear it. That's a 10% drawdown right there, followed by, 30, right? Another 10 right here. I want to show you this one right here because they get bigger as we go up higher. That's 10% right there. This one is 13%. Remember what I said on this, okay? 10, 10, 13 or whatever. Here's a huge one. So can you imagine this? Does this not look like last year? Tell me that price action right there does not look like last year. On the low, this was a 22% drawdown. Historically, if you draw down 20%, the definition of a crash is that we're going to enter a bear market. That didn't happen in 1998. That didn't happen last spring. We bounced and we went up. So this is 22%. We went up like 30, 40, 50% there and stayed on trend. And I want to explain this better to you here in just a minute. So when you hear like, hey, the bubbles burst or something like that, that didn't happen there. Here's another drawdown right here. Higher highs, higher highs, higher highs. And not until the daily trigger and the weekly trigger crossed, not until right here, did the bubble actually burst. Do you see the weekly and the daily trigger here? That's when the actual bubble burst. So if you hear people say things like, hey, it's the end of the bull market, in reality, what it is, like, it's seatbelts for major drawdowns, slam, 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 cash to deploy and hang on tight until you actually see the daily trigger. So duration matters, deployment of cash on major lows matters, and not until that daily trigger and weekly trigger crosses the actual bubble burst or broken. So I want you to remember this because this is the 90s, right? Remember hindsight, you look back on the 90s and you go, bro, remember when the tech bubble burst or the internet bubble burst in the 80s? What they don't tell you is that the ride up, following that ride up is not fun. It's not easy. It's not fun. And there's, bulls. Oh my God, the internet bubble is broken. The internet bubble is going to crash. The internet bubble is going to do this. The internet bubble is going to do that. And in fact, the daily trigger, the weekly trigger never came close to crossing that blue line. And all you're doing is holding on higher, 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 higher. And we're not doing that at this moment either. Just want to show you that in this case right now, this is a bubble, right? Notice how the daily trigger and the weekly trigger didn't cross the blue line over here. Notice how it didn't cross. And we recovered and stayed vertical, right? So we're blowing off now velocity. And we're looking for when do these, or if or when these buyers step back in. Now this, we could go all the way down here, whoop, and still be on trend. This is 2027. Still be on trend for cranking it out here into the end of the year. Or we could stop right here, 640, 6,400, 6,200, turn around, start going up. But as of this morning, this downside trade is wide open. The door is open. It's just a matter of closing. It's just a matter of closing this daily and weekly trigger. And I want to show you some other examples of this. You can see we got some risk off behavior here. Here's another example right here, right? See it cross the daily trigger. This is 2022 down, right? If you see the daily trigger cross right here, what happens? Big blast down. Here's another one right here. Big blast down. We had a close call. This is a good one to look at right here. We had a close call right here. You could say that if you're looking for similar price action, This is when the door is closing, right? We didn't get the new low down here, but I bet you there was a door opened right there. And this one fought its way up. You know, the economic data changed at this point in 2018. Well, this was Trump was president, right? So there can be some saving, right? This door was not closed. The daily trigger never closed the weekly over here. So we have the doorway open below now. So I'll say it again. The doorway open to trade 6,000. And the only thing to do now is what? What's the only thing to do now? You're looking for one green candle. Just one. You're waiting for just one green candle that fails. It doesn't matter where it fails, as long as it fails. And as long as this daily trigger comes through here, right? This daily trigger comes through, and you start seeing that red candle forming on a daily or a weekly, that is the capitulation. That's the bulls are tired. They're not bulls, but like the buyers are tired. And as soon as that capitulation kicks in, it's whoop, downtown. We start plunging. And it should be rapid. I want you to know that it's going to be one day, that if this happens, you're going to get like one aggressive green candle. And the moment that green candle peters out, you start seeing a roll lose the daily or the hourly trigger on a back test. As soon as that happens, you go into a close, you're going to wake up the next morning with, raining hell, 3% down days, not 5%, but you're going to see like, what they'll do is they'll take it down to like 5% for a circuit breaker, but just not get the circuit breaker. If you remember in last spring, there was intent in selling. We would sell right to the point of creating a circuit breaker and then back off, close the day or close the official day and then go down more. So this will be a controlled crash down here. You're not going to get circuit breakers. You're going to get a controlled crash to the downside. Now we're just waiting for that last green. Oh my God, get me out of this. And there will be that one candle. Or historically, you're going to get at least that one more candle. You're going to get like one day of green. And when it starts stalling, we're fucked. Now, if you get that last day of green candle, right? Let's say that last day of green candle is not willing to give up. You're going to see it like moon, like it'll rip. It'll be like this up here. It'll break above. It'll be like down and like straight up. It'll be violence to the upside. And they might try to throw us back down here for another one, but you should see like aggressive buying. And I want you to think right now at this moment. I want you to think this morning, however you're feeling out there, or you're reading the news or watching the news or Iran and all that. There is no reason for those green candles, is there? There's no like spark. There's no cut. There's no, hey, we're opening up the Strait of Hormuz. You know what I mean? So you need that sentiment hand in hand with that green candle. You need like big positive news, any kind of big positive news. And if you don't have that big positive news, you're going to see that green candle and be like, why are we green today, bro? And then you're going to see the stall of that green candle and the door will shut above and we will go down. We're not there yet, but we're there. We're there. We've opened the downside. It's just a matter of rejecting above at this point. So let's take a look. What time is it right now? Oh, it's almost 10 o'clock already. I'm blabbing here. Let's go back to SPY. Sorry, I was trying to come on earlier here to early this morning so that we could talk about this. And I think I've talked about it enough that you guys know all outcomes here, like if we squeeze today, where we're going, where we need to get, all that kind of stuff. So what you need to know is that we broke, or we've now hit the inflection point to open the downside door. You're going to see at some point, probably not today, you're probably going to see us trade sideways today and tomorrow. we'll just pin in here for today and tomorrow. That's what we're going to do. I just sold a bunch of spreads yesterday. We're going to just park in here. And then like after either on Friday close or weekend or Monday, you'll see like the green candle come up. And you'll see this this door close more than likely at this point. The more than likely what you'll see is like a stall. And then we come into the April roll. And we'll start the process of heading to the downside after April or on April or March 31st. On the morning of March 31st, you should see like a bunch of weakness. And then what you'll see is dealers will chase, and you will see real money selling, and you will see like real negative hedging flows. And you might get one more bump up once dealers are chasing that. They could try to hold us up here for a minute into early April. And then, or not, excuse me, mid-April, and then we'll finally capitulate at the end of April and May to the downside. So let's go look at this together. So we've done what we needed to do here. This doesn't matter. No, wait a minute. Shit. Yeah, it doesn't really matter. It's close enough. It's close enough. We've opened the door, so that's all you need to know. We're going to get rid of this right here. Get rid of this because I'm just using it to talk to you about the September 17th distribution. Whenever you look, just to review one more time, if you have the accumulation phase, you come into distribution phase. This usually looks like this. They pop it up, and it's 1, 2, 3. 1, 2, 3. And then it breaks. The bigger question is, how far down does it go? And that's where we are right now. We've unlocked this. It's just a matter of rejecting, and then we're straight to the downside. Let's go look here. Here's a monthly target right here. Hey, wrong one. Party time. Go to the week. I told you yesterday that bulls think everything's going to be fine down here. It's not. There's a trap in here for the for the bulls. We unlocked it this morning. This white line right here, this was the white line that unlocks the new down over here. Your first target on a rejection is going to be 649.50 and 648.27. That's your first downside target. Your next target thereafter is going to be 610. Or excuse me, 613. 605 and somewhere in this zone right here. If you go to, we go back to the month. There's some other targets down here for a monthly down here. You've got 571, 601, 615. So all this is going to be is a matter of grinding this out, stopping this, and then we break straight down in here. This is just a target. The door is already open. So there's no like, hey, bro, we're going to bounce here and we're out of here. That ain't happening. More than likely isn't happening. We have already unlocked this down here. So it's more a matter of, hey, let's party down here, pop it up. And then we start trading all this stuff down here to turn around and go higher over here. Just like that. It looks just like this. We're going to go back to the week. And I want you to pay very close attention to these two numbers. This is 674.93. This is where the bulls will not go. So I told you earlier that the 90s were closed, then the 80s were closed. This is where the close is for the 70s. 674, 672. No matter where we go here, this should reject. Just like this, and then down. We can even go down here. Clean this out, come up here, and then down below. In all scenarios, it's down. Risk off, down. Sell any, like any nail you see with a hammer, bam, bam, bam. Sell to the downside. Now, if you're like, hey, well, Cap's telling me crash and downside, all this stuff. For the buy the dippers out there, you need to see price action that breaks through 674.93 with two new highs. You need to see this price action before you can buy the dip. Otherwise, you can buy the dip down here if you wanted, but otherwise, you could like intraday trade this maybe, but in all reality, you're fighting the trend. Unless you see something like this, everything not nailed down will be sold. We'll sell that. We'll sell this to get down and go underneath here. And the new like safety for a bull, unless we get above here, is somewhere down here, 605. We can talk about 640 and 620, but in reality, once you're down here, once you're down inside of here, it's going to be like a V-shaped recovery process to go higher. So that'll be a lot of work and a lot of pain on the way down. Let's go to, let me get rid of this stuff really quick. So your magic numbers, if you want to snip this, there's a nice clean chart for it right here. 674.93, 672.77. Sellers need to keep buyers away from those two numbers. We've unlocked to trade 649.50, 648.27. And it's just a matter of time to trade 613.56, 605.32. Now let's look at this daily here. Here's the big red on the daily. And please don't be like, oh, Cap said we're going to crash and yet we're green today. Don't say that stuff to me. I'm just like, why did they say this? Like, so if you get a big green candle up here, don't be like, oh, Cap said we're crashing. Why are we green up here? Why is there a big green? I mean, some of you are going to do that just to fuck with me, but bro, I thought we were crashing. Like that candle right there, if it goes that high, you know what I mean? And then it stalls, you know, it's like wham, right? Big red to the downside. It's just a liquidity grab down here. And then, you know, and this is all wide open. There ain't nothing here. This is like, there ain't shit down here. So, it's just a matter of like, it's a matter of like slam through, come back up here, and then it's blood to the downside. Now let's look at what that potential rip is to the downside. Whatever that last green candle is. Do it like right there. You know, you're talking about another 11% down. And tip to tail, it is roughly 14%. That would be like min-maxing, right? If we even get that deep. Min-maxing here, right? And I just showed you, let's say we did 10 or 12% down. So we do the 10 or 12% down. I just showed you the 90s, didn't I? I was like, hey, let's look at the 90s here. 10% down, 30% up. 10% down, 20% up. 10% down, 50% up, 30% down, 60, 70% up. So for all the like, oh my God, this is doom, the internet or the bubbles bursting, it's not. We have an example of this last bubble where we do this exact same thing multiple times. And not only do we have that, but I want you to be careful of like when you see things like, oh my God, it's doom. And then all of a sudden it's whoop. And I mean like whoop, straight up. And for the 10% you gave up, you end up coming back for, 20, 30, 40, 50%. You could literally be, and this is probably why, too, there's no panic. If I explain to you why there's no panic right now, hey, why are people not selling? Why is this all controlled? Because they don't care. They know we're going to continue to go higher. They know that they can add down here, and even if they're long right here, that it's not going to matter end of year. At least right now, that's their thesis. Like, why are people not panicking? Because they're like, yeah, let's say we go down here, it's just going to be a matter. We're not entering a bear market in the zeitgeist. It's just going to go straight vertical again. You know what I'm saying? No, it's not going to roll down. No, we're not starting the big bear, 520, fucking down here, fucking 460, all this stuff. The economy is just fine. And even if we have some damage from the Strait of Hormuz stuff, it will recover before, like the Strait of Hormuz should recover before that happens. God forbid. As long as we don't get like that thing that I posted last night, right? Where everybody's preparing for that other thing. Last night I posted to you like everybody's itchy about something happening, something worse. God forbid something like that doesn't take place. Now, yesterday's stream, I said to you, the U.S. could view some of this as a weapon of mass destruction. You don't know about this regime, the U.S. regime. I made a post in the Discord last night of, excuse me. I made a post last night in the Discord. Hold on here. We need to at least discuss this. Where is it at? Now, please don't take this as fear porn or anything like that. It's not meant to be. And it says World Health WHO prepares for nuclear scenario, including weapons use in Iran. If you have a chance, read the entire article from top to bottom, not just the headline, but the entire article. If you have the chance to read it, and it's not necessarily that there's going to be a nuke set off. But I think the idea here is more so, what is a WMD? What is one? Is it when if you choke off 80% of the fuel supply for Asia, is that a weapon of mass destruction? If it is, what can you respond with? So even if you don't have the coalition or whatever, you have to be concerned about, I think Iran yesterday targeted a U.S. base with nuclear weapons on it. Yeah, with missiles. Is that considered, if they had taken out these nuclear missiles on this U.S. base, is that considered the use of a WMD? You got to remember that a WMD is not necessarily a nuclear weapon. You have to remember that some acts are viewed as weapons of mass destruction. So the U.S. would view certain things as just like a nuclear bomb. And they will also respond in kind. So until this Iran stuff kind of gets a little bit easier to go, like you have the actual Navy escorting ships, the Air Force is above, they're using the laser beam thing from the Texas-Mexican border. We're not losing any ships, and these ships are willing to go through the straits. Until that happens, until that happens, right? There's risk here. There is risk here of a major international incident of some kind. And our executive, they're not going to bend the knee. Don't expect. We've seen this in the past. In no example in my living memory, none in my living memory have I seen the U.S. bend the knee to anyone. Now, whether that's folly or not, nobody knows. But the thought that the U.S. would just say, yeah, you know what, do this or do that. Hey, you just blew up a bunch of nukes over in one of our bases. We're going to be fine with that. Probably not going to happen. And the danger to these other countries in Asia, which is not be still, I mean, it's hitting the tape this morning with diesel finally, but you got to think to yourself, like, you got to ask yourself this question. If I choke off my partners, my partners in Japan and Korea and Taiwan and Laos and Philippines, Vietnam, if you choke off my partners, is that a WMD? If you destroy their economies, is that enough to be considered a WMD? So you have to think about that as we move forward. Like, how does the executive authority in the U.S., what do they consider a danger to the petrodollar and a danger to the manufacturing and economic engine that is the West? So if the U.S. gets fearful of that, what happens? I'll give you an example. The last time this happened that I can easily remember is what? Japan, right? In World War II? In World War II, the U.S. cut off the oil supply to Japan for their expansion into China. Do you know what Japan did? They hit the fucking button, right? They were like, well, this is our plan. We're going to take out the U.S. fleet in Pearl Harbor. Well, what about when they get angry? Well, we don't care. We just need them shut down for a short period of time so that we can get the fuel that we need to get back to what we were doing, and then we'll deal with them later. So I want you to be aware here that not that something bad's going to happen, and I don't think that it is, but we have historical examples of when you go too far, it may be considered a weapon of mass destruction from the other party. In this case, the United States and our partners in the East. We're going to go over here to, we've got this one right here. This is your daily. We're going to leave this one as yellow. This one really doesn't even matter. I'll be honest with you. This one doesn't matter because of that white line right there. None of this above matters. The only thing that matters right here is this one right here, this daily close. Is the only thing that matters. We could draw this one in, but it doesn't really matter. The only thing that matters is this whole cluster right here. 674.89, 672.69, and this daily 673.12. It's the only thing that matters. The only thing that matters. We're going to look at this 4 hour right here. And I want you to now look at this right here. Do you see this 4 hour right here? There's a 4 hour cluster right here. This will become a daily close as after today. That will become a daily close. Four. And 4 for today. We're going to switch to a 1 hour here. And all we're looking for is this right here. Right here. It's dotted because we're in decline. 2. And right right down there. This is your OPEX pin, right? Let me just check the pin for Friday really quick on net. We're at 16. We're at 6,000, right? Right here. Just right in here and then plunge. And you can see that velocity coming down right now. You'll see this flatten right in here, right in here. All we're going to do is just start selling, teeing off on this hourly half-hour trigger. And your door will close. That's what it's going to look like right in there. Just like that. There's your up. This doesn't need to go all that high. It could stay right at 663, 670, doesn't matter though. There's your second low. Here's your door open. Plunge it down. Second low, chase it all the way to the downside. This is into April OPEX, the beginning of May. And then we'll recheck again to see if this thing is, hang tight here. You want to see it? Just like that. So pump down, close the door for liquidity in the beginning of the month, send that fucker down. Watch this. This is going to be your key area. If you start to see that, that's the big green candle right there. If it starts to peter out, we miss that top right there. We miss start to see that stall. This is your hourly trigger. You see that stall down here, back test, and underneath it, it's bam, 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 party time to the downside. You guys want to see it? Me to post this for you? I've got this going up, but we can start selling. That's 1,600 right there. Here is the sell everything. So that big red line up there. Not sell, but just want, like, we're roped in, I guess, is the point that I'm trying to make. If we begin to lose at any point, like, don't take a downside trade today unless we lose this bottom down here. We need to lose this trend. So just watch this, see this right here. Even if we go up, or even if we go down and up or whatever in here, as long as we don't lose this, maybe as long as we don't make a new low, there's no short here. If we go down here, though, make a new low, we can start shorting to trade that downside target. Let me just show you this really quick. If you're trying to trade this, if you want to trade this down here, you have to get the second low. If you're able to make the second low, we can then take this downside trade, but there's no trade there until you take that new low with a rejection. So you just sit here and do nothing. Mark this one right here. There's 12. I'll be honest with you guys. I think that we're going nowhere. We're just going to park sideways the next 2 days. I don't think we go anywhere. If anything, it's up. There's 12:30. We are roped right in. We're going to go right into the vortex that's quarterly OPEX. Right in there. Sorry about the wait. Just want to give you perspective as to where we are. And this is our range right here. Just stuck in a range, stuck in the middle. Okay, I'm going to take a quick break, like just 5 minutes. I'm going to go potty, get some new water. When I get back, we're going to look at all of this doom shit. I'm going to post some stuff in the Discord for you. Some key white papers on this. And then when I'm done with that, we're going to try to identify stocks. Listen to this closely here. So forget the indexes. We're going to look at some stocks that are either have been mooning all quarter or stocks that have been going down all quarter and see if there's any big trades tomorrow. They should start at the close today. You should start to see some things like I think last night into this morning, some stocks started breaking down. So you're going to have a chance to get long or short on stuff that's been going down or all the way up. And what you'll see is the shorts coming off of a ticker so that they can get more liquidity to short that fucker again in the new quarter. So we're going to take a look at that. The second half of today will be spent on trades for tomorrow, like these big down moves and big up moves on quarterly OPEX. Another note today for you is that tomorrow is DivX for SPY. And you're going to see option sellers that want to rein in price in here and in here, right? Like keep price right in the middle into tomorrow. This is where they want price. If we start coming too high, they'll try to slam it down to keep us in this range. Do you see this range? Right here. Well, this is the middle, right? See the middle? And option sellers will attempt to keep you in this middle. Now, I want you to know that when we get into about 2 p.m. today, I'm going to show you this right here. Right here. Right around 2 p.m., the market should look like I want to show you something. Let me go back over here, show you this better. Do you see how this this weekly or this hourly trigger is turning up? It's flattening. You should theoretically see the market look bullish as we head into 2:30, like it's going to squeeze. And option sellers are going to try to dump options or dump underlying to make this look kind of weak. Right around 330, 230, 330. If we can catch 130, 230, somewhere near. We'll wait and see if this turns around. If it does, there could be an attempt to capture the dividend on tomorrow. And this thing might go vertical at some point at the end of the day. There is a huge trade in here. Huge. And it goes straight vertical, and then it gets dumped on open tomorrow. Right on the opening bell, you should see a bunch of equities get sold as soon as that capture trade is done. So we'll watch this around 130. I want to say it's 230, but you know, you say 230, it starts dumping at 130. Everybody's like, "Oh, bro, you didn't tell me," and I'm like, "Yeah, I did, bro." So we'll watch this begin to look bullish, and then the attempt to sell down into the end of the day. Watch this very closely. I got that nice little yellow thing in there. If you don't know anything about the DivX capture trade, just hang out. We don't always see it, but we see it frequently. So frequently enough. We'll see if we can catch that today. I will look at that ticker if you want. I have not looked at it, but I will look at it for you. Leave that right there. And this is all. Oh, we don't need this here anymore. We just know that that's S2 right there. It's all you need to see. Yeah, no worry, Mas. I got you, brother. I'll take a look at it here in just a minute. I'm just going to take a quick break. I came on a little early this morning. Just a few notes, like production notes and stuff like that. Normally, when we come into a quarterly OPEX, you know how you have like stress over a quarter or a month? In the moment that stress goes away, in anything, not just a quarter, but in life, you're doing something. When we come into the end of a quarter, my brain releases a bunch of cortisone, and it's like, hey, the quarter is over. No matter if we're going up or down, it doesn't matter. So my brain is like telling me, the quarter is done. Let all the stress and the work and all of that wash over me. I don't know if any of you were feeling that this morning, but I do. Like I mark my quarters and months and stay with the market. So normally I wouldn't be on this morning. Most days after the quarterly FOMC, I normally wouldn't show up on Thursday. And then I would come and babysit for Friday for OPEX. I say that like babysit literally because it usually goes sideways. Sometimes we get big moves end of day or something, but it's generally like the relief of the quarter being over to some extent. But I'm here today. I'm here with you guys, and I'll be here with you tomorrow too. I was thinking that I might take tomorrow off, and the other reason for this is because FOMC days I get fucked up in the throat. Like what happens on FOMC day is I talk all morning, like give you the primer and the prep and all that, and then Jerome comes on, and there's all of these emotions by traders, and I end up getting fucked up. So this morning or yesterday, I slept yesterday crazy hours. My body just was like, you're done. The quarter's over, and I like collapsed and crashed. And then this morning when I woke up, my voice was on fucking fire. It was pretty bad. Like my wife was feeding me ice water last night and then feeding me a ton of ice water this morning. So I got to go potty. As we come into this quarter end, I just letting you know that today is like for at least my brain telling me the quarter is done. We're over for the quarter. And I'm also a little worn down with my voice. So I'm going to go potty, and I'll be back with you guys in just a minute. And then we'll get into the next segment of this where we start talking about the damage being done. And then we'll spend the last third of today on opportunities tomorrow and an outlook for tomorrow. Okay? Remember, yesterday I said to you that there's a lot of people in the pool trying to close quarterly positions. You should be waiting until after the quarter is done to be opening any major positions. You can gamble and shit, but if you're trying to start like a new quarterly trade for next quarter, you want to wait until the first week of the new quarter. First day, last day of even the last day, like the 31st or the first week of the new quarter. Just be patient here as these processes take place. I'm going to warn you again one more time. You might be opening trades today and tomorrow, right? And it should go your way, up or down. I don't care. Like, hey, this looks really bearish, or hey, this looks really bullish. And every rule out there is saying it's going to do its thing, and then it goes the completely inverse of what you would normally work for you. So just be extremely careful the next 2 days. And your thesis is you should be thinking about this. Listen to me closely here, because I say this every year or every quarter and every month. And then people don't care. They're just like, hey, bro, I think this is going to happen. I'm going to open this position. And I'm like, why? There's like no point in you opening that position right now. You should be coming and saying, hey, I'm closing all of my quarterly stuff right now, and I'll be back in a week to open my new positions. So if you're trying to plot and plan right now, hopefully you're going to say to me, this is for a plan for 2 weeks from now on the first week of April. Not, hey, this is my plan for the next 2 days into quarterly OPEX. It scares the fuck out of me when I hear that kind of stuff. Do you get what I'm saying? Hopefully you do. If you don't, you'll pay for it until you do bend to that will. So not with me, but with the market. You'll end up bending to that will. Just be patient. Chill out. I don't know how you feel, but I've been doing this a long time and trading for a long fucking time. And when you come into this quarterly OPEX stuff, month end and a quarter OPEX, you're just sitting there and absorbing what's going on and looking for entries to open a trade, a much bigger trade for down the road. Does that make sense? Hopefully it does. I say this every fucking quarter. And what happens every quarter is I'm looking around everywhere, like Reddit, on Twitter, and Discord sometimes, and I'm like, fuck are these guys doing? Like, these fucking guys are trying to, like, rule the world on a day when everyone's in the market trying to do their thing. Like, that's insanity. Don't do it, okay? Please don't. And we'll try to get some trades for you for tomorrow if we anything that's, like, been really, like, min-maxed. And we'll see if we can catch any of these trades. Also note here, too, that typically, if you were to scale out where we are right now, right, this will look, in hindsight, this will look like a sideways move and will go higher. So if you're persisting, like, I got to get this trade on cap, the only thing I would say to you is options go to die tomorrow. And you should see this upside move, but it'll be delayed. It's gonna be delayed. It's gonna be like Monday or something. Tuesday, Wednesday, Thursday, you'll start seeing the hand come off, and that trade to the upside. I don't expect it today or tomorrow. I expect it like Monday, Tuesday, Wednesday of next week. So in your hindsight, you'll be like, oh, I had all these plans, and then they don't, like, they're pinning you in, and then the hand comes off, and whatever. So like, if you're a bear, you probably don't have a trade here until end of the month at some point. The bulls will accumulate this and rip it up. They'll close the door on the bulls in the first of the month, and we'll get this bigger move to the downside into the month of April and May, potentially, as of what it looks like right now. Okay, hopefully that helps you guys. And I will give me like 5 minutes. I gotta go to the bathroom. I've been sitting here working all morning, and then I came on the show earlier. It's 10:33. I just gotta go potty really quick, and I'll put the thing on right here for you. We'll get into like gas and diesel and the sour crude and dirty crude from the Middle East. I'll be right back with you guys. Remember, this is going to look bullish into like 1:30, 2 o'clock. 2:30, it's going to look bullish. It's going to like, you're going to see the accumulation, and you're going to see the option seller for the quarterly close just go in there and hammer it. Hopefully we can catch that hammer down and sweep it and then run it up into the bell, the closing bell. I'll be right back with you guys. New Squawker's on too.
Qatar's PM says that Qatar rejects Iranian claims that Wednesday's attack on gas facilities in Qatar were targeting US-linked facilities. Semaphore reports that the FHFA are to offer a measure to further lower home buying costs, the proposal to come in next week or two. So Semaphore here is citing an interview with FHFA Director Pulte. So ECB giving some more color on Lagarde's scenarios earlier. So the adverse scenario sees inflation rising to 3.5% this year. Severe scenario sees inflation at 4.4% this year. And a severe scenario also sees headline inflation at 4.8% next year. Severe scenario sees inflation at 2.1% in 2027. And the scenario sees headline inflation at 2.8% in 2028. ECB, again, just repeating what Lagarde said, that the severe scenario assumes a more intense and prolonged disruption than in the adverse scenario. And the adverse scenario sees inflation falling to 1.6% by 2028. ECB forecasts assume 2026 oil price of $81.30 a barrel. This forecast assumed 2027 oil price at $72.10 a barrel. Forecast assumed 2028 oil price at $70.20 a barrel. Black Sea CPC blend oil exports are set at 1.6 to 1.7 million barrels per day for April, against 1.4 to 1.5 million barrels per day that was seen in the March revised plan, according to sources. ECB say 2026 inflation is 0.9 percentage points higher than in the adverse scenario. Forecasts assume an exchange rate of $1.16 in 2026, 27 and 28. We have posted the ECB projections material on the feed for those interested. ECB say 2026 HICP 1.8 percentage points higher than in the severe scenario, 2.8% in 2027. ECB severe scenario sees second quarter to third quarter 2026 recession in the euro area. The ECB sees inflation peaking at 6.3% in the first quarter of 2027 in the severe scenario. The Wall Street Journal report that Japan's minesweeping capabilities come into focus ahead of Trump's meeting with the Japanese leader, which is in around 15 minutes' time. So, ahead of this meeting, with again Trump and Japan's PM Takaichi, the key question is whether Tokyo would agree to support the US in its efforts to reopen the Strait of Hormuz, and if so, how. One area that experts have raised is Japan's minesweepers, given the US Navy hasn't had a significant mine clearing capability in decades. Qatar PM now says Qatar retains its right in international law to respond to Iran's attacks on LNG facilities. We have put out the link to that Wall Street Journal article on the feed for those interested. So seeing some commentary from the IMF, they say every 10% increase in oil price, if it persists through the end of the year, could lead to a 40 basis point increase in global inflation and a drop in output of 0.1 to 0.2%. The IMF notes the overall impact of the war in Iran will depend on duration, intensity, and the extent of the conflict. Central banks should remain vigilant in wake of rising energy prices, with a careful eye on whether inflation is expanding beyond energy prices. The IMF says its preliminary assessment is that the Iran war will weaken growth in GCC countries, depends on the country's ability to resume exports. IMF staff are updating their recent assessment of the US economy to reflect the impact of the Iran war. We also have the US Treasury auction sizes. So the US had to sell $89 billion in 3-month bills on March 23rd, settling on March 26th. $77 billion in 6-month bills on March 23rd, settling on March 26th. And they're selling $69 billion in 2-year notes, March 24th, settling March 31st. $70 billion in 5-year notes, March 25th, settling on March 31st. In 10 minutes' time now, at 11:15 a.m. Eastern Time, Trump is due to be meeting with Japan's PM Takaichi. The pound rises 1% to session highs, so that's session highs for cable. In 5 minutes' time now, at 11:15 a.m. Eastern Time, Trump's due to be meeting with Japan's PM Takaichi. We've got the live video on the feed for those interested. So we're shortly expecting possible comments from Trump and Japan's PM Takaichi. Again, we've got the live video on the feed. The Fed bids for 4-week bills totaling $621.5 million. So in 10 minutes' time now, at the bottom of the hour, the US is due to sell $90 billion in 4-week bills. The prior high yield was 3.64%. The prior bid to cover was 2.77. CNN report that a US F-35 made an emergency landing at a US airbase. So this is coming from a CNN reporter on X. They say that this US F-35 fighter jet again made an emergency landing at a US airbase in the Middle East after it was struck by what is believed to be Iranian fire. Axios report that an Iranian missile has hit the Bazan oil refinery in Haifa. In 5 minutes' time now, at the bottom of the hour, the US is due to sell $90 billion in 4-week bills. The prior high yield was 3.64%. The prior bid to cover was 2.77. We're shortly expecting the results of the US 4-week bill auction. Israel's Energy Minister Cohen says the damage to the power grid in the north is localized and not significant. Three-month, 4-week high rate at 3.615%, 3.615%, with a bids cover of 3.12, 3.12. The US selling $90 billion in 4-week bills and awarding 9.49% of bids at high. Iran's mayor confirming that Iran missile targeted the Haifa oil refineries.
Tight here. Watch out for a little bit of weakness here. We've got some VIX 9-day support right now. So I just want to highlight this top line thing. I said to you earlier that today what you should see is what looks like strength. And you'll see sellers coming in, trying to smash this thing down into this 230, 130. They're going to try to crater this to the downside. Right around like 130, 230. Let me take my thing off here. What you're going to end up seeing here is like what looks like strength for a breakout to the upside, right? And in fact, it's going to get sold down. And we're just waiting for this 130, 230 sell zone to try to grab this SPY dividend trade. Sometimes it doesn't produce itself. Every once in a while, you'll come into this trade. It's not every time, but it's not every QuopX, but this is what it normally looks like, something like this. And right around this like 230, it should start to get like wanting to plunge. And we're looking to see if this gets bought. If it does get bought at 130, 230, 330 in the afternoon, if it does get bought, this normally results in a huge squeeze up into the bell. But sometimes it doesn't get bought. So just looking at this right now, I just want to be watching this closely. And this will begin to look like it's going to break out as we get closer and closer. And there'll be like a bull trap in here. You'll be like, oh my God, it's going to break out and it's going to plunge. And we want to see if this actually gets bought so we can crank this bad boy up. And what'll happen into the bell, if it gets bought, what'll happen into the bell is it'll get super ramped, like literally hold on a second here. Like it's going to look like it's bullish, like it's going to start squeezing, plunge down into this 230. If it gets bought, we can go long on this and it'll get cranked right up into this close tomorrow. And then it'll get dumped in the morning. It's a great zero-date call trade. Sometimes it doesn't produce itself. So it'll start looking bullish, and then it'll look extremely bearish, and then it'll be whipsaw to the upside. So we're just waiting for 130, 230 in the afternoon. There's not much to do here. This price action looks just like this normal Thursday before quarterly OPEX. If it does show itself, we'll take the trade. And for right now, we're just going to watch this all afternoon. There isn't too much to watch right here. Just note, though, that there is a trap in here for bulls from option sellers that do not want this price to go up here. They'll try to pound this down, pound this down, pound this down, pound this down into the close. Sometimes they're successful. We can trade down here into the close or into tomorrow, but we'll see if they did that DivX trade up here. It's a kick-ass trade. If it does work, or when it's worked for me in the past, I normally will drop like anywhere from like $2,000 to $3,000, like $2,500. It can pay like 20 grand. So it's that lucrative. If it does happen, it's super, super lucrative. So we'll just pay very close attention. We'll do this really slowly, or we'll just monitor this all day long and see if we actually catch the trade or not. There isn't much else to do here on this topic. So I'm going to then now switch the show to this whole thing with, we're going to switch this show here to what I've been discussing with you for the past 2 weeks, maybe longer, I think, at this point, which is the danger to markets. Let me see if I can bring this up really quick here. I'm going to post this for you. Hang tight 1 second here. Let me, give me 1 second here. And I'm going to read this to you if you're a free member that watches just the show, if you're not inside the Discord or whatever. Just hang tight here. If you're in the Discord, I'm going to post you this article and the white papers from this article, and we're going to start chatting about this. If you're not in the Discord, you just listen along. If you're in the Discord, you can follow along with both the article and the white papers. Let me post this in the Discord for everyone. So if you're looking for the catalyst, there it is. I'm going to read it to the rest of you out there. This is from BBG. Fuel shocks are even. This is from BBG, but the other stuff that I'm going to post for you here in just a minute is not from BBG. It's from Goldman and JPM. So this is from Michael Ball, Bloomberg macro strategist. Risk assets face a harsher stagflation shock now that energy infrastructure is being targeted in the Iran war. That means crude needs bigger risk premium. But the real pain will increasingly be in products. Well, listen to this closely here. The real pain is in products, where diesel, jet fuel, and other distillates are rising faster than oil and weighing more heavily on growth-sensitive assets. So you know that everyone out there is talking about, what about fertilizer? Yeah, maybe the people that are making the fertilizer, what about them? But in reality, the growth-sensitive assets are more important. This is no longer a logistics story. Once fields, ports, and refineries are in danger, the market stops treating this as a temporary.
Will not implement a crude export.
Voice news disconnected.
Once fields, ports, and refineries are in danger, the market stops treating this as a temporary shipping bottleneck and starts pricing a broader supply shock. Goldman Sachs energy research team sees three main channels through which the conflict in the Middle East reduces supply of refined products. And listen to this closely here. Refined products, okay? Oh, let me move this up. Maybe just change this here. You can see what's going on right now. Hang tight here. I'm gonna leave this for this red bar down below on here. I was gonna change this out a little bit, but there we go, right there maybe. So Goldman Sachs energy research team sees three main channels through which the conflict in the Middle East reduces supply of refined products. My God. Hold on here. Number one, the hit to Persian Gulf's ability to export refined products. The Persian Gulf accounts for 3.3 million barrels daily of refined product exports. That's 13% of global flows. 13% of global flows, but not Asian flows. With nearly all of the products exports typically passing through the Strait of Hormuz. So you might think like 13%, it's not so bad, but it's like 80% of Asia's distillate flows. The refined naphtha used for petrochemical feedstock and middle distillates, diesel and jet fuel, each account for about 1/3 of Persian Gulf refined products exports, while 2 million barrels daily, nearly 60% of the refined products exports from the region go to Asia. It's actually higher than that. It's 80%. Well, in total, it's 80%. This is just the naphtha being 60%. Nearly 50% of Asia naphtha imports and 40% of European jet fuel imports come from the Persian Gulf. However, Europe had over 2 months of middle distillate stocks, including SPR, in days of demand covered before the war, which should provide some near-term buffer So near-term buffer. Number 2, higher Middle East refinery outages. We estimate that refinery outages in the Middle East increased to 2.2 million barrels per day on both physical damages at Bahrain's Citra refinery and precautionary shutdowns, the UAE's Ruwais refinery. And even this morning, you've heard stories coming out of refineries being targeted in the Middle East. The IAEA estimates that over 4 million barrels per day of refining capacity in the Middle East is currently at risk. Some export-oriented refineries in the region, including Kuwait's Al Zour, have reportedly already slowed crude runs as storage approaches capacity. Iran's threat to retaliate by striking Gulf neighbors' energy assets after its offshore natural gas fields were attacked Wednesday morning is a clear escalation and new phase in the current conflict. Now, you've already heard me telling you that this stuff would start to pop up, right? I told you that you'll hear something over this upcoming weekend. We went through the weekend, and all of a sudden it was, hey, we're not going to export Jet A anymore from China and from, I believe, Vietnam and Laos. We haven't heard that from Korea or Japan yet, not publicly at least, or not picked up by the tape or by mainstream media. Number 3, the hit to crude imports into global production of refined products. The Persian Gulf typically exports nearly 15 million barrels per day of crude via the Strait of Hormuz, including 12.8 million barrels per day to Asia refineries and nearly half of total Asia crude imports. Nearly 60% of typical crude exports from the Persian Gulf are medium and heavy crude, typically used to produce jet fuel, diesel, and fuel oil, with much more limited alternative producers outside the Middle East versus light crude. The example being U.S. shale, not sweet crude. Moreover, the two main crude redirection pipelines around the Strait of Hormuz, East-West and ADNOC or ADNOC, primarily export light crude, which flows more easily. As a result, the 5 million barrels per day decline in global exports of medium and heavy crude year to date versus 1.7 million barrels per day increase in light crude exports is disproportionately weighing on global production of middle distillates and fuel oil. The real economic hit comes through the rise in product prices. Diesel above $5 a gallon in the U.S. is the clearest warning because it runs through trucking, construction, and industrial margins fast. Jet fuel, gas oil, fuel oil, and naphtha are under even more pressure, especially in Asia. So where you might feel the pain here, like, oh, we got to pay a little bit more for this, demand might go down, or maybe I'm going to leave the Dually Detroit diesel at home. We're going to take the Subaru out for the weekend. What really matters in this crux is not you at home in the U.S. with your Dually Detroit diesel. What really matters is Asia. And when you're in Asia and you have to make a choice between, hey, do we fuel jets? Do we refuel machinery? Do we refuel that stuff? Or do we provide that energy for the people, whether that be an electric producing power plant or machinery or vehicles for private people? You start to have to make choices between industry and the people. Average global jet fuel prices rallied by $74 billion a barrel since the start of the Iran war, more than double of the average crude price boost. Gulf barrels skew sour and often medium, and with a meaningfully heavy component, feedstock that many Asian refineries are built to upgrade into diesel and other products. You lose those barrels, and global crude slate gets lighter and less well matched to much of the refining system. So they don't even have the refineries to build out or to process the light sweet. They're built to distillate the medium and sour oils. the market structure is validating it. Heating oil, gasoline, and 3-2-1 crack spreads are all trading at multi-year highs, and product time spreads remain steeply backwarded. Now, I want you to pay attention to, if you look at the chart for crack spreads, the high on that is right where the decline was in 2022. And as that crack spread starts heading down, it led to a bear market in U.S. equities. WTI is lagging Brent because reserve releases and export limits means spot tightness in the U.S. will be more limited than on the global stage. So you want to be paying very close attention. I've got some other articles here, but you want to be paying very close attention over these next this weekend and the upcoming weekend into the end of the month and end of the quarter. And I want you to think about when if we don't have improvement in the Middle East and we start to have more shortages, you'll start to have ramping prices in the U.S. You'll start to have the East will begin making more choices as to who can use what, like for what's available in their supply chain. And so if you're looking for catalysts, if you're looking for like, hey, what makes the markets capitulate in the month of April or the month of May, you want to be paying very close attention to this stuff rather than, oh yeah, credit spreads are down or whatever. We'll bring credits or excuse me, private credit is going down. Private credit will go down because of this, not the inverse. It is due to the destruction that's taking place quietly that you cannot see or read about in the newspapers. They're going to try to tone this down as long as they possibly can until they have to put controls on at some point. And you'll also feel this in the United States. So you'll feel it in the U.S., but more importantly, you start to slow down the economies of our trading partners. There's pain there. There is pain that will be priced into the stank market or the U.S. equities market. So that's the first one that I have for you here on. This is the first one that I have for you here on this topic that we've been discussing. If you're looking for like, how does this take place? How do things not work out? You'll be looking for that over the next few weekends. You should be looking for it in this weekend. You want to be watching closely the propaganda machine or the narrative machine of the United States in particular. I wouldn't necessarily pay close attention to Iran and what they say. You want to pay attention to what they're doing. Like, are they still attacking and destroying these processing facilities? You want to pay attention to that. And you want to pay very close attention to everything that the U.S. in particular does or does not say over the next weekend, the next like 2-3 weekends. So you come in on Sunday or like we close on Friday, and do we get U.S. boots on the ground? Do we have the attempt to get to shepherd through these large crude carriers or not? And do you see? And is it bad? Is it? Do we lose? Are we losing ships? Are we losing men or women? Are we actually taking control of this Strait of Hormuz? Now, even though this is all like, hey, this sounds like bear shit and bear talk and all that kind of stuff. If the U.S. does come out and say, hey, we launched this, we've got this laser system going on, we're knocking everything out of the sky, that's a no-go zone over there, and now we're shuttling through these carriers, and we haven't lost anything, and things improve, yeah, we can not only do that squeeze move that we're supposed to do, but it would probably have follow-through. We'd probably go vertical. Now, the issue that we have is time. Time is of the essence. As more time passes without a resolution, things start to get more breaky, right? Like, you're like, hey, I'm driving this hoopty around, and one wheel fell off, and it's still driving, but it's tipping, and we're about to turn onto this, 13% grade, and the car might start scraping on the side. Things will start falling apart. The wheels start falling off the hoopty, and like the wheels start falling off the hoopty, and eventually it's going to matter. So that's how you get to that point where if you have that squeeze that gets rejected on the cross of the daily and weekly trigger, you'd be looking for, hey, what is the catalyst? What is that news catalyst? And that is this news catalyst right here, where a ship gets sunk or the U.S. fails to do this. U.S. fails to go to the negotiating table. You can say it any way you like. Negotiations. We control the waterway and the skyway. Any of that stuff doesn't happen quick enough. And this is quick. Like, you probably have at max. You probably have max until, I would say, April 4th. Max. And maybe they'll revisit again in the middle of April. Maybe they revisit, but that would mean that the U.S. stock market is on a low at that point. So the stock market will make the equities market pay for no resolution as we move forward. And these time frames, like, hey, we got 3 weeks, we got like 3 or 4 weeks now, or now we got 2 weeks, now we got 1 week, now we got a week. Can become kind of hairy as we get closer and closer to these deadlines, and closer to where there's actual structural damage done to economies. Here, hold on a second. Let me just show you this. It's up, down, grind, grind, grind. Up, down, grind, grind, grind. Looking for weakness into 1:30, 2:30 in the afternoon to try to catch a rip up into the bell. For the last half, it's literally the last half hour of the day. It's like 3:30 like 2:30, 3:30 in the afternoon, and it goes violently to the upside. Like, it's violence to the upside. Trump saying we're not putting troops anywhere. That's false. Christ. Trump here saying we will be speaking regarding Japan's support on Iran. No shit. Shocker. Trump saying we'll be speaking on Japan's support on Iran. If you wanted to know who should support the war, you want to know who the coalition of the willing is? I'll tell you who it is. It's Japan and South Korea. That's who it is. There's also news out there that Europe is not supporting this war. That's false too. So there's a lot of bullshit out there. The Europe has explicitly said that they will help in the Persian Gulf and in the Middle East. What they do not want to do is be an aggressor against Iran, but they will defend as long as they can in the Persian Gulf. If you want like a nation that would help put an end to the actual conflict that's going on, your coalition, of course, is Israel, and the other two partners would more than likely be Japan, South Korea, and maybe some other countries to a smaller extent, and possibly even Australia to an extent might join in as well. So your coalition of the willing, more than likely going to include those countries. Now, fascinatingly, when Trump mentions Japan here, he says, we will be speaking regarding Japan's support on Iran. Trump believes Japan is increasing its efforts. You bet your ass they are. I told you earlier in the week that I went to the Japan subreddit, and I was looking for any kind of hint at this, and even in the Japanese media, there was no discussion about this. None. No discussion amongst the Japanese Redditors or American Redditors in the Japan subreddit. This was last weekend, heading into Friday. I'm like, I'm surprised they're not talking about this right now. So you should see this discussion begin to ramp up as we move forward in time. Trump also saying we're not putting troops anywhere. That's absolutely fucking horseshit. We went from 2,500 Marines to 5,000 Marines, and it's public knowledge that troop carriers have been leaving Europe, and you can see all over the place American service members claiming that they're getting orders cut for them across the country, especially reserves and National Guard members. Trump saying the Iran excursion will be over soon. He believed that the impact of Iran would be worse, will end soon. Iranian leadership is gone. They are seeking new leaders again. We can take out Carg Island anytime we want. What is this? I thought it was going to be worse, much worse, about the increase in oil prices. We'll discuss Japan buying U.S. military equipment. He says that, and then he says Trump on $200 billion for the military. We're being very judicious. You know what I think he's using word salad right now when he says like there won't be troops in the ground. I'm going to tell you exactly what it's going to look like. I think I've said this to you before. I think I said it yesterday or maybe the day before. What you're going to see is this the deployment of this laser system from that we were testing in Texas for Mexican drones. This is when we shot out of the sky American drones. We shot any and everything out of the sky. What we did was we put a no-fly zone over this area. We said if we catch you in the sky, we're going to shoot you down. And everyone complied except for government drones, and those got shot out of the sky. So you'll likely see that system be deployed in the Strait of Hormuz. You'll see, of course, U.S. service members servicing this deployment. There's also other public information where U.S. Warships have the same system on their ships. So they'll have a mix of land-based and ship-based laser, drone, aircraft suppression that should be deployed. You're not going to, I don't think you'll see many Marines on Carg Island. You might see like small contingents with amphibious ships. You'll see some kind of beach landings on the Iranian side, believe it or not. And then what you'll see is U.S. forces, spec ops forces that will do seek and destroy missions within Iran as we continue to take leadership out. Now, to service all of this, you're going to need a fuck ton of U.S. service members in support. So if you don't know this already, there's a massive buildup in Kuwait and some other places in the Middle East to service and support these operations. And then you should see if we do that, that should take place like this weekend, next weekend, the weekend thereafter. Over the course of like the next 2 to 3 weeks, you should see these operations commence. And if nothing goes horribly wrong, you will see Trump come out at some point and say to you, "Hey, look, we've got ships moving through the Strait of Hormuz right now, and everything is hunky dory and okay." But you probably won't see that movement of tankers until these operations take place. And the U.S. basically saying, "Hey, look, we're putting ships through right now, and nobody's sunk any of our ships. Come with me, and I'll take you through." But you need that public acknowledgement that we're doing those things, and you're not going to get that public acknowledgement from the United States until that shit is well underway. And then Trump will say to you, "Hey, we're doing the laser thing. Hey, we're doing this and we're doing that." And there's like we've suppressed all air. Anyone in the air leaving that vicinity of Iran, like that coastline of Iran, and those drones, you might see like there are rockets and missiles that have longer distance, but in particular drones have a very short launch area or effectiveness area of probably like 30 miles or less, somewhere in there. So if you can suppress that 30 miles. If you can suppress that 30-mile zone for drones with the lasers, and then you've got U.S. aircraft and counter missile batteries, you're going to then see some stability in that area. So as long as something terrible doesn't happen, Trump is probably right on this stuff. And it's just a matter of time. It's just a matter of the deployments and the execution. And then testing to make sure that nothing's getting out of Iran into, and probably bringing the Kurds in and a bunch of other shit. When you get these like U.S. special forces that are coming in to the seek and destroy shit, you're more than likely also going to get like CIA trying to, bring out the protesters, arming the protesters, and supporting some kind of a regime change at the same time. But it all needs to work in concert. So If all the pieces aren't in place to do this, you need everybody at the same time doing kind of the same thing. So you should expect that in the next 2-3 weeks. It does take time to coordinate shit like this to take place. But I would expect it to, when it pops off, it should pop off just like Venezuela. Should be just like in a weekend. They're targeting all of these leaders. They're putting people in charge. They're loading up the arms for the people. Maybe the Kurds are coming down to help facilitate this, while you've got CIA and special forces that are basically leading the charge, and providing logistics and providing intelligence on who to take out. So that should take place quickly. And I think Trump's right on this. I don't think you're going to see an invasion force in Iran, like the U.S. and Iraq thing. I don't think it takes place like that. I think this is the second wave of regime change without 500,000 troops inside of Iran. But I have to tell you something. If you don't think there are hundreds and thousands of U.S. troops over there right now, you're out of your fucking mind. And if you don't think they're on their way or mid on their way there or building up there, they are. We are amassing those troops. So even if this were to fail, even if this next 2-3 week operation fails, to see an invasion Iraq style, the pieces are being moved in place for that second plan C or plan Z for an Iraq style invasion. So if this doesn't work over the next 2-3 weeks, you'll see the market crash down, and then you'll likely see some kind of an invasion force that is like Iraq, the Iraq invasion. It will escalate to that point. Unless something else happens, you get an agreement or something like that, some kind of backdoor agreement or some kind of small chance. And I don't see the U.S. healing. I think it's possible. Anything's possible, but I don't see the U.S. doing this. And I don't think a lot of this action has to do with Iran. And I don't think it has to do with Epstein files. I think it has more to do with midterms and the ability of the U.S. to prepare now for China. It's basically, this all has to do in a greater extent to China. And if they can't get it done after the midterms, they're going to do it right now. So their time frames are being moved up, and it's like get all this done as fast as possible before the end of the year, so that when we do have this confrontation with China, that we are ready. Oil, man. The O is for oil, and the I is for Israel, and the L is for logistics to fight a war. And that's what we're doing right now. Sad to say, but that's what's going on. And you'll probably see these partnerships announced with Japan and with South Korea to some extent over the next few days, week, or whatever. I'm surprised he didn't bring up South Korea, to be honest with you. I'm actually surprised he only brought up Japan. They're number 8, but Japan's, I think, number 5 in the world for world economies.
And gasoline exports.
Let me turn this back on.
So ECB sources say discussions over possible rate hikes may need to start in April unless there's a quick resolution in the Middle East conflict. April is likely too early for any rate hike. June is more likely. As
Voice news disconnected.
Practically nobody to shoot at them. You know, their missile count is down, Pete. Maybe you could discuss it by about 90-something%. The drones are way down, and the factories are being demolished. Maybe.
Yes, sir. Our missiles being shot are down over 90% since the beginning. One-way attack drones down 90% since the beginning, which is a reflection of overwhelming firepower. But you mentioned the most important part, Mr. President. Their defense industrial base. If you can't make more of it in the future, then you have a limited supply. And so we're going after all of their defense contracts.
Yeah, but China and Russia are supplying those drones, so this is a false argument.
For their military that they've never seen before.
This is from Whiskey Pete there. He's just using, no one's listening to Whiskey Pete right now. Nobody in the shipping industry cares. They're all laughing. There will be drones supplied and missiles and rockets supplied from Russia and from China. So you need to literally be able to stop that. Not the drones from coming in, but you need to be able to stop them in the air.
Oh, he doesn't believe he's beautiful. Oh, he's sounding shy.
With
Go ahead,
people,
please.
of course, no, Japan and US are very good friends. But one question: why didn't you tell US allies in Europe and Asia, like Japan, about the war before attacking Iran? So we are very confused about we Japanese citizens.
Well, one thing, you don't want to signal too much. You know, when we go in, we went in very hard, and we didn't tell anybody about it because we wanted surprise. Who knows better about surprise than Japan? Okay?
Holy fuck.
About Pearl Harbor,
Oof.
right?
God damn.
This could be. No, you
This
believe
guy knows no. He's got no fucking. He's got no fucking.
And because of that surprise, we knocked out the first 2 days. We put
He's got no filter.
50%
This man is so crass.
and much more than we anticipated doing. So if I go and tell everybody about it, there's no longer a surprise, right? Okay, one more for the Prime Minister.
Mr.
please.
President,
Are you good for the Prime Minister?
yes,
Go ahead, for the Prime Minister.
He's got no. He's got.
Japan's biggest concern is China. Now they're giving us export control and very harsh terms to criticize us. So could you plan? Will you plan to bring out relationship between Japan and China while you?
Yeah, we are in World War III, bro. We're already deep in World War III.
Well, I'll be going to China very quickly, but
Yeah, you delayed it though, bro.
I'd like to have the Prime Minister talk about China because I know they have a little bit of an edgy relationship, and I'd just like to know where it stands, how you're doing with China. So, please.
で日本はいつも中国に対してオープンです。会話はオープンにしています。それから冷静に対応しています。でとにかく米中関係も含めてですね、これが地域の安定、それから世界のサプライチェーン。これに貢献するものであることを願っています。日本は常にオープンです。
So first of all, Japan has been consistently open to dialogue with China. And also, second, we have been addressing our relations with China in a calm manner. And also speaking of the US-China relationship, my sincere hope is that the relationship will be something conducive for regional security and also ensuring the global supply chain in the world. Once again, I would like to reiterate that Japan has been consistently open to dialogue with China.
And I think we're going to have a great trip. The trip has been postponed for about a month and a half. It's been reset, and we look forward to it. And I'll be speaking Japan's praises when I'm in China with President Xi. But we're going to have some good talks today, and I think mostly about trade.
Remember that this is a fake out up here. This isn't where we're going. They're going to fake us out that we're going up there, and they're going to dump this thing into 230.
Particular Alaska, because Alaska, believe it or not, is very close. It's much closer than any other source. It seems a little cold compared to, but it's just a short trip.
So that's something that we will talk after the press corps leaves.
We'll be discussing trade, and a lot of the talk will be about energy. Thank you very much, everybody.
That's fairly in line with what we've been discussing here, right? Fairly much in line. No hot mic. The press conference just ended. Trump saying Japan, China, and Europe get oil through the Strait of Hormuz. We're going to China very quickly. Japan and China have a somewhat tense relationship. China trip postponed a month and a half. That's already known. Japan discussion was also about energy and oil from Alaska.
for the EU are to review oil supply security if Hormuz disruption persists.
Japan discussion was also, but yeah, that's all I've got there. Japan discussion was also about energy and oil from Alaska.
So Trump has now ended remarks ahead of his meeting with Japan's PM Takaichi.
Wonder if I can catch like the put side of this down and then catch the call side up if it comes. Yeah, I saw that. Like you and I can talk about Japan and the history of it and the context of history, but Trump is like, you know all about this when you attacked us, right? I'm like, God, I don't want to hear that. Like, not from the president.
Traders priced 16 basis points of ECB tightening for April. They saw 13 basis points earlier.
Half-hour trigger coming up on VIX 9-day. It's currently at 24.87. Just looking for a nice bounce down here. $24 should have a nice little spike up into the close here. Should come in right around 130-ish, 1230, 130, somewhere in there. See a little bump up and then a spike in volatility into the close. JP Morgan cuts outlook on S&P 500 as oil shock raises recession risk. JP Morgan has lowered its year-end S&P 500 target to 7,200 from 7,500 as surging oil prices driven by the Iran conflict heighten recession risks. The bank warns markets may be underestimating the economic impact of higher energy costs. While investors focus on inflation, JPM sees a bigger threat to consumer demand, which could weaken growth. Historically, oil spikes above 30% often trigger demand destruction and have frequently preceded recessions. In the near term, the S&P 500 could fall further, especially after dropping below its 200-day moving average, a bearish signal. If selling continues, the index may find support around 6,000 or 6,200, may find support. 5,600 would be where we start probing the depths of hell down there. Although JP Morgan still expects a recovery later in the year, supported by investment and stimulus, gains are likely to be more limited due to ongoing geopolitical risk. Fairly much in line. This just came out 3 seconds ago. Fairly in line with what we were discussing with you earlier this morning. Oh, hold on here. What's that?
Traders now see more than a 60% chance of an ECB hike by May, roughly 70 basis points of hikes priced in for 2026. It's up from around 50 basis points on Wednesday.
Remember that thing that I posted for you earlier? Will this time be different? The news flow around the Iran conflict is becoming increasingly concerning for global markets. Yet, despite the growing tension, the price action is closely following the typical historical pattern seen in U.S. equities during geopolitical shocks, and we may now be nearing the point where the markets tend to bottom. I agree with that they bottom, but it's the rejection above that matters more. We bottom, start ramping, and then if we close the door on the daily trigger, that's when we'll see that continuation to the downside. A lot of this is all predicated upon, all of this is really truly predicated upon this next stage of warfare with Iran. And can we stop the drones? Destroying their drone plants is not good enough. You really truly need to be able to shoot them out of the sky, anything out of the sky coming from Iran, whether that be missiles, rockets, or drones. You need the proof of that, the proof, and we don't have the proof at this moment. Like the talk, like the Whiskey Pete shit with, hey, we just destroyed a bunch of their plants. That means nothing. has no bearing on does a ship cross the strait. These insurance companies and these shipping companies, they're not going to take that risk unless there's like not 90%, not 85, not 95. That there's a literal wall from that stuff coming into the strait, or a resolution, one or the other.
UK's PM Starmer's office says the Prime Minister was clear that the UK would continue to stand with Qatar and all of our allies in the Gulf.
What are you guys talking about? Is what's happening in Cuba considered a weapon of mass destruction? I don't know. Like, that's a tough one for me. Like, I think with Cuba that they're going to try to do it internally. Does Cuba matter maybe to Russia? No, not like they used to. We don't have the USSR anymore. We have Russia. They have no reach. Like they're not. They really are not like an expeditionary force anymore like they used to be. The situation in Cuba is not the same as it was late 80s and early 90s. They're kind of on their own right now. So I don't see like Russia being that. They'll probably saber rattle, and they'll probably do some supplies, but I don't think that they're as critical to Russia any longer. I think you'd see the same support as you would in Iran. And not only that, I think that this grows and grows and grows. And like you figure like the time, like on time frames, like now into 27, 28. I think we've talked about this in the show before. When you threaten the United States, it's not like two kids on a street corner and like you threaten the U.S. or you do something, you're doing something to get to this point to be the hegemony in the world. Like if the U.S. is looking at China and they're saying they're fighting for the hegemony of the free world, there isn't any de-escalation at all. What the United States does in every single whenever that happens, what the U.S. does is they ramp meeting that threat, and then they attack that threat. They don't like ramp up and then do nothing. There hasn't been a moment in history where we've done that ever. So we either move into this stalemate like we did in the nuclear build out in the 40s, 50s, and 60s, and 70s, 80s, and 90s, to where we like hit this Cold War and a war of attrition, or it turns into a hot war. It's one or the other.
Chance of an ECB hike by
There is no de-escalation from the United States. There's none. The U.S. will escalate to a fighting war or to an attrition war in a cold or hot environment. And time is we're losing time, you know? Like, so when we get to that moment, like, hey, we're ready now. It's 2027, which is what? We're in 2026, guys. That's like 9 months, right? So that means we're already ready. We're not going to be ready next year. We're already there. And not only are we already there, we're probably already prepared, even if it's not publicly made known. And we're going to escalate to that point where we will escalate to that either summit or a Cold War or a hot war. The U.S. won't stop. I think that's something that, do I like that? No. But you have to look towards history. You know, it's one thing, like, it's always good to be like, and especially me, like, I'm very anti-war, very. But I have to be a realist in my expectations of what's going to take place next and the effects on the stock market, the economy, all that kind of stuff. So though I want that to not happen, it's going to happen. the escalation will continue. It sucks to say, and I'll be honest with you guys. If you think that like there'll be a regime change in the U.S. and there'll be a full reversal, that's a very small chance. From everything that I can see, they've both been doing it. Democrats, Republicans, they've both been working towards this end goal. It's just a matter of do you want nice daddy or bad daddy, and nice mommy or bad mommy, and how they implement this behind the scenes. It's what it is. We're going to meet them head on. There's a direct threat to the hegemony of the West, and even bigger than that, the United States. And so they just won't stop. It sucks to say that, but it's what it is. And meanwhile, of course, you know what you and I are doing. We're all infighting, right? Like the plebs, like the regular people are all infighting. And then the backdrop of all of this, of course, is AI build out, right? Gen AI. So I guess if you really wanted some or maybe a chance of this stopping or being arrested, or I was on a phone call yesterday with a friend, and the only we were discussing like protesting and like poor people protesting, and I was like, like the only time that protesting has ever mattered, where it really mattered, especially in the U.S., was the Revolutionary War and the Civil War. And the reason that those two events mattered was because wealthy people and powerful people were losing wealth and power, or had the chance of losing it, and they were backed by bigger wealth and power from Europe. In this case, the bigger wealth and power is not behind the middle and upper middle class and educated. They are with the ultra wealthy. So it's not even the same right now. So like, let's say someone making six figures, mid six figures, they don't have that power and wealth behind them this time. Only a very small group has that that backing. So the chances of us having like a civil war, revolution, something like that, are very slim. It's not the same situation, or it is the same situation, but it's a matter of this new economy and the government to serve it. It's a very small group of people. And you can see the clamoring, right? I'm assuming you can look around and see the clamoring for influence to be in that group. It's not too hard to see, right? Like the Peter Thiel and the tech CEOs and our leaders. Our leaders are wrapped up in this 100%. And you can also see it in China too. There was a Politburo at one point in China. They made the shift away. They now have a dictatorship. And they've got Xi that is running the same thing, but with more concentrated power and even less power brokers. So this is more a larger fight for control over this new economy and the governments to service this new economy that's coming. Or, I mean, we were discussing this on a phone call yesterday, or it's the largest fraud in history. It's one or the other. It's the largest outlay of capital in history for this new economy. It's literally the largest outlay of capital. So it's either going to be the largest, like, the tulip thing that all the bears talk about, whatever the fucking tulip massacre was or whatever. It's bigger than that. This is either the largest fraud known to man in history, or it's going to be the new economy. And there's a larger fight here for how does that economy get served. And in this particular instance, due to not needing the plebs or the middle class or the upper middle class to service this new economy, the group that's going to push this new economy and push these attempts at new government are very small. And so what happens? You have to like create bread and circus to keep the rest of us occupied. Even Diamond came out at Winter Camp for Men at Davos, and he literally, like, these people are telling you the facts publicly, and none of your news is addressing it. Like, nobody. Not the New York Times, not the Washington Post, not the Wall Street Journal, not your CBS, CNN, Fox News, none of them. Zero. MSNBC, none of them. PBS, none of them are addressing what the facts are being stated to you in public. So it's all clamoring for this new economy and this new government. I mean, Jamie Dimon literally said publicly, hey, this disruption in employment is going to take place in finance, right? The U.S. since the 80s we jumped over a curve where most Americans are somehow employed in finance or healthcare, something service related. And at Davos, Jamie Dimon said, clear as day, this isn't like like someone dreaming about Gen AI, or I don't know, like a futurist speaking, or a conspiracy theorist speaking. This is the CEO of the largest fucking bank in the world. And he said at Davos, clear as day, he said, hey, this disruption is going to come into the finance world. And he said, and he used as an example truckers. He said, hey, you've got like we're coming to a point where you can literally, with a snap of a finger, wipe out the trucking industry. Even last mile stuff. Like we're at that moment right now. Within months, we could probably do it today. And his point was, you have to do it slowly. If you do it too fast, you're going to take jobs away from some person that makes like 120, 150K a year in the trucking industry. He said, if you displace all of those drivers, you're going to have civil unrest. Now, he said, you got to do it slowly. And he said a few key points here. He said, you got to do it slowly. He said, and you have to be able to relocate those people, where the government intervenes and listen to that closely, relocates those people and destroys this industry slowly. It's like the frog boiling in the pot. And you might think to yourself, when he was saying these things at Davos and it was reported, oh, that's good, he's going to save the truckers. But in fact, he's not saving the truckers, and he's not saving financial workers. He just doesn't want the disruption, the civil unrest. So if you slowly dismantle truckers, relocate them, do you want to be relocated? I don't. I don't want to be relocated. I'm a U.S. citizen. It doesn't say we're going to relocate you at somewhere. I don't want to be relocated. Or maybe if I'm forced to be relocated, it would be because of what? A disaster, right? So the disaster might not be physical, like the cliff falls off the side, Florida breaks off the U.S. It's because of a disaster is when you relocate people. So maybe it's not something you can see, like the destruction from a hurricane or a tornado or a flood like in New Orleans, but there's another disaster. That's how you intervene and say, you're going to do what I tell you to do. Now, if you tell everyone to do it at the same time, there could be civil unrest. If you do it slowly, it's like the enshittification, right, of everything that you see in life. It goes right back to the stories I tell you about getting gas at the pump or self-checkout at Walmart. The slow grinding degradation of services. And if you slow it down over time, you start working through generations. Like, so this can happen over 5 years, 10 years, but you've got China racing towards it, right? Corporations, I think the guy from Anthropic said, hey, me and this other guy, me and Sam Altman, we could make a deal to roll this out slowly, but we can't make a deal with Xi. So this all gets ramped faster and faster and faster, this like race to the finish line. And you should be worried. You should be worried because it's not a conspiracy theorist telling you this. Like, these are your leaders telling you, hey, this is happening whether you like it or not. And we'll do all we can to stop you from revolting in some way. But it's not in the service of giving you a better life. It's in the service of removing you from the workforce making that money. And historically, you would think that those people will get so pissed off that they will create civil strife. But in fact, you need money for that to happen. And those people are not on your side. They don't care about you. It's more like, hey, how do we like, do this in a way that causes lesser pain and have younger people accept this. Like, so if they do it, they try to spread it out as best they can, even if it's a matter of UBI. You could start with like UBI and placate old people that are like middle-aged, 30s, 40s, 50s, 60s. But then you stop the UBI, like the the pacifier, right? You can slowly wean them off the pacifier the younger they are. So when you get to kids that are adults, or maybe kids that are 15, 20 years old, 25, 30, you give them less. When you're 10, 12-year-olds, what you end up doing is you brainwash them basically to accept less. And anyone that's like 10, 5 years old, they get less and less. And by the time those people are 30 or 40 or 50, they're not going to be expecting to make what would be in today's dollars, 100 grand, 200 grand, 300 grand. And you'd probably dissuade most of them to seek out education, unless they were extremely smart in the areas that those people are needed in. And you would just accept some kind of a life that's, whatever that AI Star Trek thing is. Now, you might be listening to me speak and say, well, I'd prefer that anyways. I'm okay with that. But there's a lot of people that are not. There are a majority of people are, most people are working towards something bigger and better in life. They go to continued education. They work in high profile, powerful, creative positions. Like, if you're a consumer and not a creator of things, you're probably fine with that. But if the vast majority of people are not, it's the American dream, right? That we've forgotten that yet, like the American dream. So you have to consider that as we move forward, and the dangers. And this timeline is being sped up due to the hegemony of the world. And do you think that these people want to give up the hegemony and power the most powerful and most wealthy people? They do not, and they have never. They didn't in the Civil War, and they didn't in the Revolutionary War, and they didn't in the turmoil that took place in Europe, the revolutions that took place, the infighting in Europe, and then the destruction of the East India Trading Company. They all came to the U.S. Like all those banks and that money, power, and wealth, they shifted that power into the United States in the Revolutionary War, and then consolidated it during the Civil War. Then you saw the same thing take place at the turn of the century, World War I, World War II, and you should see something similar to that. I just don't know how bad it's going to be. It could be easy pain or really bad pain. And if you look at history, it's always been very painful as we do these things. So I don't know how we slow it down. I honestly don't. I don't know how it gets slowed down. I do that like with when I call him Bill, or I say, "Hey, Bill Huang's coming on," because Bill Huang was like a big time grifter. I also wonder if I'm catching that. Do you think maybe I'm catching that YouTube? Maybe I'm catching that YouTube accent, possibly. You also have to remember too that I got a lot going on here. It's like hard to like. It's hard to like I'm trading and then I'm reading and then I'm reading what you're doing and reading what they're doing, and then I got like a bunch of screens up. So I have like a lot going on. My brain's going like I'm like multitasking many things at the same time. My brain in the course of a stream, I usually have like 8 different things going on. Even though it doesn't look like that on like what you're consuming here on the show, there's a lot going on in the background. A lot more than it seems. Not like Hegseth. Keg's breath. Some of it is where you live, though, too. Someone recently said, that's not how you pronounce this. I forget what it was. It was something. Someone said to me, you don't pronounce this like that. Why are you pronouncing this like that? And it was the guy the guy was from Massachusetts. He was like, why are you pronouncing it like this? That's not how you pronounce it. I Googled it. I pronounced it right. But it's pronounced differently in Massachusetts. So there could be a little bit of that going on, too. Maybe you haven't heard some words pronounced a certain way because of wherever you're from. Could even be just a regional thing. Yeah, it's looking bullish, isn't it? Looking so bullish in the 230. Look at how bullish this looks. Even though there's a bear flag here, it's looking like it's grinding higher. It's going to escape to the upside. Let's see if we can get that blast down, though, into 230 to scoop up. Looking so bullish right now. It would be great if it happened, if we like blast down and then the rip higher. Oh, no. That sucks. I liked Chuck Norris as a kid. I never got into Chuck Norris when his later life, but I was a fan of him in my real young childhood. When his peak was when he was doing like Lone Wolf McQuade, and he was something Barrack or something. It was something with like Vietnam or something he was doing. When he was doing like all the martial arts and shit. Oh, Invasion USA. I like that movie. And then of course he did like the Texas Ranger shit, and I was too old for that. He became like a meme back then. Walker Texas Ranger is when he became a meme. He'd take like a 357, like shoot a helicopter out of the sky or something. Like just stand there and just like start shooting, and all of a sudden the helicopter would fly out of the sky. But I hope he doesn't pass. He's a good guy. He's always been a good guy. I'm down with Chuck Norris. He's never had anything bad, has he? I don't think he's ever had anything publicly that's been for him to be canceled.
The Fed bids for 10-year tips total $2 billion.
Close that. Where is my economic calendar? What do we got going on for tech events? We're wrapping up, I think, today. We're wrapping up NVIDIA General Conference. There's the Qualtrics. Tencent has earnings on the 18th. That's already happened. Start Summit. Next week, we've got, for big ones, we don't have anything big until the 23rd. That's the RSAC in San Fran. Nothing for a little while here. 22nd to the 24th. We had Netflix earnings April 16th. Hopefully they could. Yeah, that's a good one to keep in. If you want to see something to keep in mind here, Netflix earnings on April 16th is a big boy. It's now 12:46. We get the 10-year at 1. 10-year tips auction at 1 p.m. Next 14 minutes, and then we get the Fed balance sheet at 4:30. Friday, we get nothing. We got a Baker Hughes oil rig at 1 p.m. And then Saturday, we get a Fed speech from Jerome Powell. Woo! He's going to do cleanup to pump the markets. So after our FOMC, right, the Fed will monitor the stock market. And then if the market's going up, they'll try to tamp down the stock market. And if the market heads lower, they'll try to come in to support it. You should probably look for Jerome to come out on Saturday at 1:30 and say something like, "Don't worry, we'll turn the money printer on if things go sideways." Monday at 8:30 in the morning, we get the Chicago Fed National Activity Index. You get a 3- and 6-month bill auction at 11:30. So after the Fed tries to calm the markets on Saturday, the 3- and 6-month will be in relation to that speech on Saturday. On Tuesday, you get ADP employment change. Tuesday, you get the Global Composite Manufacturing and Services PMI flash. You also get a 2-year note auction at 1 p.m. That's interesting. And then on Wednesday, you get 30-year mortgage rates tied into the long end of the curve. And then you get import exports month over month this is on Wednesday. Then you get some more oil stuff on Wednesday. Bigger news next week on Thursday, the 26th, you get claims. And then Michigan consumer sentiment final at Friday of the 27th. Monday, the 30th, manufacturing index. We get jolts on the 31st, which is a big one. And not only that, you get the big contract hedging rolls on the 31st. As a matter of fact, this is interesting. So if we start selling the 31st on the contract rolls and you get dealers chasing that negativity, you also get NFPs on Friday the 3rd. So if you're looking for something to sell at a high, right, sell down into the Thursday the 2nd. If you can catch a high on some kind of a squeeze here between now and the end of month, if you're looking for like a target from the downside, it would be NFP on April 3rd. Keep that in the back of your wallet or in the back of your Rolodex. You can't change my username color without warning me. It's like moving a sofa. Well, we should talk about that right now. We've been talking about
the US is due to sell $19 billion in 10-year tips.
We have a few minutes here. I don't know if Bork's talked about this yet, but our plan here is our thesis here is we're going to be looking for some moderators for day in, day out moderation. And then
a challenge for the auction. Having risen substantially alongside the tumultuous moves in oil prices, JP Morgan interest rate strategists said in the note that proxies for the broad US rates volatility include the ICE Bank of America Move Index of Treasury implied volatility and a 3M10Y swap chin volatility.
Watch out for some risk-off behavior in 1 p.m.
Now, news now reporting that Iran has fired a fresh wave of missiles at Israel.
I bet it's that bearish, bro. We're looking for moderators in our Discord. If you're watching the show right now, if you're a free member and you're looking, if I've known you for a long time, if you're looking to be a moderator in the Discord or anything like that, reach out. I'll get you a free membership or whatever. if you're in the Discord and you're looking to be a moderator, we're like I gotta think we're interviewing and talking to people. So I'd like to put I think we'd like to put more emphasis on in day-to-day moderation, and then leave our quants to do what they do really well, which is like Winky's like a fucking stock quant, and John L is our resident quant as well. That guy's a pro, man, in like real life. So we want those guys to be doing the stuff that that they're there for, and then try to get some moderation, more moderation for intraday, day-to-day kind of stuff. So I think that's where we're at with like color changes and what people do and stuff like that. Because those guys are doing heavy lifting right now. We have like moderators that are doing a lot of heavy lifting. So I want to like ease some of the responsibilities of everybody. A little bit of weakness here heading into the 1 p.m. tips auction. A little bit of fear here. 10-year tip auction. Let's watch this closely. Talked about what looks bullish will in fact be quite bearish into 2:30, 3:30 in the afternoon. Getting closer and closer that this here is a fake out. What we're trying to do is follow this down to the downside and then hopefully get a SPY dividend trade rolling into the end of the close. Let's watch this closely. You could probably take this trade here, one of these highs, and chase this down into 230 if you want some puts. I wouldn't do it right here, but if you get another high up here, I think I've talked about this with you all day long today, and this that we should look we should look like we're going to squeeze up. It will be a fake out. We'll go down. We'll wait to see if they swoop back in. If equity buyers, this is all tied into options here. Trying to park the markets into. Trying to steer the market into quarterly OPEX tomorrow. If you're interested in it, send me a DM. You might just look at my profile, click friend, and then I'll friend you back, and I can accept DMs from you if you're interested. I just want everybody make sure everybody's experience is good and positive. Be able to help people out. Let's watch this closely here.
In 5 minutes' time now, at the top of the hour, the US is due to sell $19 billion in 10-year tips. The prior high yield was 1.94%. The prior bid to cover was 2.38%.
Oh, another note here too. We've had some pretty successful stock scanner picks going on. If you're looking for, I would be very careful here on any of your outperforms as we head into tomorrow. When we get into this one after this 1 p.m. After just this quick tips thing, between 1:30 and 2:30, I'm going to take a quick break. And I'm going to present you with some trade ideas for the close that are not index related, that are stock related for this quarterly OPEX. And I'll come back on the show and we'll discuss a few of them on public. And then I'll be posting some other ones for members inside the Discord. Most shorted stuff and stuff that's outperformed, underperformed, that kind of stuff. into quarterly OPEX. AI insiders warn of dangers of emergent strategic behavior. No shit. You can see it clear as fucking day. It's not just emerging strategic behavior. I was this past week I've had 2 or 3 instances where I think that even if you're opting out of AI, it's being used on you and things that you use. I noticed like Reddit's deleting a lot of stuff, and like they're curating prior history. I was searching for something this week on YouTube that I had watched years ago that I needed for production in the background. I couldn't find the video; it was gone. And I was thinking to myself, I'm like, man, how I figured it out was I started searching for this topic. And as I scrolled like 2, 3, 4 pages of returns, there was no returns after like a page and a half. It started actually asking me if I wanted to watch other shit. And I was like, oh, they're trying to dissuade me here. So even YouTube is like curating its own history, which is frightening. And it started like eating itself like an algorithm. Like the algorithm was like, oh, we don't have any more answers for you, bro. So I'm like, that search engine's no longer based on an algorithm that we've used on YouTube for years and years. It's now probably AI based. So even when you opt out of this stuff, like, hey, I don't want to use this search engine's AI, you're being they're now shifting over from the traditional algos to AI-driven algorithms.
The auction results come a couple of minutes after this.
Chrome is like that too. Google search is like that now too. It's clear as day. Any guys use like DuckDuck or DuckDuckGo or anything like that? You can see it clear as day. So like even if you're not opting in, you're being opted in one way or another. I have some things going on with Microsoft too in the background here, on the back end here, where I have a settings being changed on me. Every time it asks me if I want to finish or setting up my Microsoft account, and I say no, like I'll wait another 3 days, and then I'll click the "Don't remind me anymore." When I'm making those decisions, it's changing things in the background without my authority. I'm assuming at some point you're not going to be able to opt out. Like, hey, do you want to use our AI? No, fuck you. You're just going to use it. I'm not even going to tell you that you're using the AI.
10-year tips yield about 1.88% ahead of the auction.
Let's watch this closely. You will be shitified. I was thinking about that earlier this week. Earlier this week, I was thinking about the advertisements that are on YouTube and Twitch. I'm like, it's obscene. Like, just the number of ads is fucking, and you can't control that. Like, or I have some control over it, but not full control. And like the ads are like the intensity of them. The number of ads is insane. In like social media is creating their own gardens, so that you do everything inside of their garden. I mean everything, like file your taxes, get your credit card, get your mortgage, buy your food and your cars and everything, right? So like we're creating these little fiefdoms. There's likely going to be a period where I'm going to have to self-host videos and live streams, and not not be trapped inside of those kingdoms. It's not today, but it's sooner than I think. It's probably in the next 1 to 3 years. It's happening rapidly, where it just becomes junk, or I'll have to live within their system. I just can't do it. Until the social media wars are done. Watch out for this weakness coming into this 1:30, 2:30 in the afternoon. If you're a bear, you might want to start thinking about putting your bear rate on. We're fairly close to it. I'm going to remove this one now, and we'll see if we can catch that bear rate into this 230.
6%, 1.896% with a bid to cover of 2.47, 2.47. The US sells $19 billion in 10-year tips, awarding 93.45% of bids at high. Primary dealers take 7.5%, direct 23.99%, and indirect 68.51%.
US Treasury 10-year tips yield extend rise after auction, last at 4.5 basis points at 1.891%.
Boom. Oh yeah, doom.
According to a Politico reporter on X, the Senate banking Republicans are discussing adding banking deregulatory provisions to crypto market structure legislation in exchange for the House accepting a Senate-approved housing package.
Whew. See if we can trap these fuckers in here today. This fake weakness. This shows the end of the day rebalancing here. We can get that weakness into like 2:30, 3:30 in the afternoon today. They got a fuck ton to buy back here. And almost 11 billion. There's the break of that bear flag. Second corrective wave. This is the actual second right here. 1, 2, 3. This will be 4, 5. Now, give me like a few minutes here. I'll be right back with you guys. I'll take a quick break here. I got to look into this stuff for the end of the day for tomorrow. Give me just a few minutes here. I keep forgetting I got to be ready for tomorrow morning here for the close because we can't do it in the morning. We got to do it today. It'll be too late here. All right. I have one more minute here. I'm almost ready here. I'm almost ready to do this. Here's one that's really fucking juicy. Xwell. Oh yeah. SNSE. Let's look at hymns really quick. Oh, hymns is looking good here. Hymns could squeeze tomorrow. We can look at a few of these together. Give me just a minute here. There's a bunch. I'm looking at a bunch of this stuff here. There's a few juicy ones in here. Like one of these ones I'm looking at right now is it HCTI? Check this one out with me, guys. Look at this one. Here's one to look at here. Now, what you're going to be looking for is
Chevron restarts jet fuel unit and its 285,000 barrel per day El Segundo refinery 5 months after the fire.
HCT. Now, this is not. Don't take this as an enticement here, but I do want to show you something. Is it this one right here? You see this right here? Now, this isn't the best example, but this is right here. Yeah, that's Thursday. Now, you can't predict exactly the days that this takes place. This can take place on quarterly OPEX or OPEX. But interestingly, this is February OPEX. This was the actual OPEX day. It plunged. But then a few sessions later, it fucking ripped like a monster. Now, some of these could rip on OPEX or quarterly OPEX, but some will plunge. So, like, normally it's better, like let's say you come in like quarterly OPEX or an OPEX. You want to be looking for in the early morning, like 4 a.m. for volume. If that volume is buy volume, in this case it was sell volume, but if it was buy volume, it would start fucking mooning. Now, if you come into your favorite ticker or a highly shorted stock and there's sell volume, you want to check back in a couple days. And the reason being, so as an example, let's say you were watching HCTI on February OPEX, and in the morning you see a bunch of sell volume. You would come back right after that Friday on that Monday, Tuesday, and look to, because they got the print and then they need to rehedge. So this was a move that was, in this particular case, it was a move that was 114%. And this can happen in either fashion. So like when you come into tomorrow, you want to have like a basket, like 10 or 20 stocks at like 4 a.m. And if you see like big buy flows or big sell flows, the opposite of this can happen. You can actually see the rip on OPEX itself. If you see the sell flows tomorrow in the morning, you want to check back on any that do that. And a prime example of one that I'm looking at right now is HIMS. It's like, here's HIMS. And let's look back on February 20th and February 20th. This is the 19th. This one popped early. This one popped early. You can see it popped on the 19th, but then it was sold down. But like I was saying, if you come down here, right, you start seeing this stuff right here for this big rip up to the upside. Look at that HIMS move. Oof. Oof. And so my question here is, are we able to either get...
disconnected.
Why was my voice news disconnected? What happened there? I think like this is one of the most shorted stocks out there right now. I do want this daily trigger is coming higher, and this daily trigger is getting bullish here. See it? And this hourly is prime for a squeeze. So you want to watch HIMS closely tomorrow. If you want one that might pop tomorrow morning, HIMS is a prime target here. You can see these buyers have already stepped in on HIMS. There could be some squeezy action in here tomorrow. It's one of the most shorted stocks out there right now. I think it's number 6 in the market. Volume today is 17 million. It's normally 32 million. So keep an eye on this one for tomorrow for a squeeze. I'm looking at them right now in the background. I have to go through them all. The first one that I showed you, if you like, not that you have to like, I wouldn't take the trade on the first one I showed you, which is HCTI, but I would watch for those sell flows on HCTI. And if you get them tomorrow, look at longing it, make an email to yourself to take a peek at it for next week. And that one went up 100%. Looking nice and bullish right now for the upside. If we get high enough into this close, there should be a nice downstroke tomorrow on SPY. If we can go like something like this. If we can go something like this into tomorrow. Some kind of a rip up into the close here, and then a whipsaw down into tomorrow's close over here. Trade like 53.50 or not 53. Trade this one right here. Maybe make it a little bit easier for you to see. Like, come on up into this close, and then whipsaw down into the bell tomorrow. I've got it charted on an hourly basis. Looks kind of wonky here, but if this was on an hourly, it would show this for tomorrow. It's like 648, 649 for tomorrow. But there is a nice little ripper forming in here. Just have to see if we can catch it down here around 230. And catch something just like this, like they're teasing it. And then it all gets bought right up into this close. I'm assuming it's that red bar over there on that book map. If we can get down to where that red bar is, we can get nice fucking rip faces off to the close. Just a little bit longer here. I'll be right back with you guys. Yeah, KALV looks pretty good. KALV had a nice bounce off its weekly. It's coming into its daily. You want a nice prime squeeze trade for tomorrow? KALV. KALV. To trade like 1850.
According to Politico, US lawmakers are in talks on energy permitting reform. So, according to a Politico reporter on X, full readout of Trump administration with oil executives says oil executives asked about the chance of crude oil ban. Secretary Burgum said definitely no. And on permitting reform, the administration that it said its priority. Discussions happening with DNR right now. Both sides are more optimistic lately. ECB Stoneus says Iran conflict could have large macroeconomic impact. ECB Stoner, speaking in Frankfurt, said Middle East conflict is adverse supply shock, and Iran war could have large impact if it persists. The euro rises 1% to a session high versus the US dollar. NASA plans a bigger SpaceX moon mission role in a blow to Boeing. According to Business Insider, Google told staff it's leaning more into AI national security deals. Ukraine's Zelensky says Ukrainian negotiators to have talks in the US on Saturday. Oil prices pair gains. US crude falls below $96 a barrel. According to Israeli Broadcasting Authority from sources, the joint campaign between Israel and the United States is expected to continue for several more weeks. According to the IEA, saying initial oil volumes from reserves started to be available. ECB Stenoris says the EU should issue debt jointly to finance defence, green transaction and strategic investment. The IEA confirms member country contributions to collective action to release oil stocks in response to the Middle East disruptions. The IEA says member countries have contributed 426 million barrels of oil. An IEA says overall release of emergency stocks will largely consist of crude oil. The IEA says in Europe the contributions regarding this will primarily take the form of refined oil products. And the IEA says this is being complemented by additional production from countries in the Americas. Trump is believed to support Pirro's appeal on Powell's subpoenas, and Trump was open to the idea of ending the Fed probe until the judge's ruling. So we have posted the IEA oil stocks statement on the feed for those interested. According to CNBC, Meta backtracks on decision to end Horizon Worlds VR. NYMEX WTI crude April futures settle at around $96.14 a barrel, down 18 cents or 0.19%. NYMEX gasoline April futures settle at around $3.12 a gallon. NYMEX diesel April futures settle at around $4.34 a gallon. And finally, NYMEX natural gas April futures settle at around $3.16.
Okay. Here we go. It's 2:30, or it's now 2:30. Let's see what's going on. Let's see if we can get that drop in here. That dump and pump. Watch this very closely. Notice how bullish it looks. Like this looks pretty bullish here, right? Like come up here. Right? Just come up here. Bam, bam, move up. But in fact, there's a trap down here for bulls. And we'll see if we can catch this run up to the upside. There's a lot of buyback here too. Like, there's a few things I want to talk to you about here. There's for 1 date gamma of today, there's a pin at 6,600. We're at 65.79 right now, so the pin is slightly higher. The pin is slightly higher at 6,600, but then there's a bunch of like magnets above, like 6,700. Max pain is 6,800 here. So there's like some massive, and the buyback on today, today's notional buyback is like $11 billion into the close today. Some other notes here. So like Friday's OPEX is one of the, of course, like you hear this all the time. It's the largest expiry on record, and of course it keeps becoming that because the dollar's worth less. Hold on here. The expiry is roughly $1.3 trillion. I had it in front of me here, the exact expiry number, but I don't have it right here for some reason. 1.3 trillion dollar delta notional, about 30% of the total market exposure will roll off on tomorrow. The positioning is balanced very well right now between calls and puts. The directional impact may heavily depend upon how traders choose to reposition after this expiry. Now you got to remember there's like two expiries. There's this one, and then there's the month-end expiry. There's two big ones. And you also have how the banks hedge or roll these hedges. Are they more bearish after or on the 31st, on the morning of the 31st? Or are they are things looking up where their hedging is not as bearish? So you got to think about like I'm hedging bearish and I'm also selling. I'm selling equities and I'm hedging. And you want to think about that tomorrow during tomorrow's expiry and then on the 31st, the open of the 31st. And it'll impact directionally it'll impact depending upon that repositioning. The most significant structural factor, the factor to monitor, of course, is going to be the JPM collar and the knock-on traders that trade that on the 31st. The collar consists of I think it's 35,000 contracts or something. And those strikes are 54.70, 640, or 64.75, 64.75. Currently, we're trading 65.74. So there's a magnet or a vortex down at 64.75 for tomorrow. So that's why I've got us going up, or I've got us weak here. So I've got us weak here, right? So it should start looking bullish into 230. It should be weak in here, like the draw down, we're going to go down there and trade 64.75, right? And then the trap comes into play. We go high, and then on the open tomorrow, we dump down into that magnet or vortex to the downside. Now, don't use this as I'm on a 1 minute chart right now. I'm using this to visually represent this. Rather than the attraction down to that number today, we would sell equities on the open tomorrow. So this is, at any rate, this is like a big event, right? So that's or not a big event. Quarterly OPEXs are some of the largest events of the year. You figure the biggest expiry is the end of the year. The second biggest is the 6 month, and then the 3 month, of course, is the next, like the third most important event of the year for the stock market. You got to remember that like options drive stock market. Equities can drive stock market, or like amplify. Like if you're like long calls and you're buying equities. And I realize that people buy equities and then hedge with puts, but there's this like other side to this. Like, oh, I'm excited. I'm buying a bunch of calls and I'm buying my favorite stonk over here and all this other stuff. And when you switch that sentiment to I better hedge, and we're so low right now into this new quarter, maybe I should start cutting my hedging and cutting my stock exposure. So you want to think about this as we head into tomorrow's expiry, and then, of course, the 31st at 9 a.m. Depending upon the repositioning flows that come through the markets in that time period, it's going to either stabilize the market or it's going to make the market unravel. And if you watch the show this morning, and you think about those hedging flows, right? Let's go over here and look at this. So, let's go over here really quick. And can I just mute this? I don't want to draw. I mean, I guess I'm going to have to redraw this anyways. We can redraw. I'll redraw this. We'll just redraw it. Hold on here. So I want you to think about, even if you have like this, you have this like vortex for options down below, like in this larger grand scheme of things. What are you doing here? Show all that stuff. Sorry about this. So if you're like, yeah, well, we've got this magnet down below here for tomorrow's OPEX. If we can catch the DivX thing up here, and then we slam down into this vortex down here, but there's still this squeeze here. And if you think about it from the logic of, if I'm rolling my hedges out on the 31st and I'm JPM, I theoretically want the best price I can get, right? If you don't have any resolution in Iran, you also have this daily trigger coming down. It's clear as day. You can see it, right? As a matter of fact, I would suspect that if you were to just draw a simple fucking line, in the direction of this stuff right here, you can see it right here. This is the 31st. So if you just draw this like this, there's this like date with destiny over here. And you can see the first is right here. I believe there's the 31st at 12 p.m. So, here it's creening down. Here is the, think about this week, right? Think about this week right here. Closing on a red week. So you figure just inside of this right here into the first, this is going to be a crucial moment. And even if you don't get the, sorry, this is kind of janky looking, but you get the gist here, right? So even if you don't get the pump up here today, whether you do or don't, it ain't gonna matter. You come into this like OPEX zone, this like all options go to die, and then once you get the roll of all of these options today, and you get the roll of the hedging flows in the first, you should see some kind of like an unclench in here. I was looking at a stock earlier with you. I think it was H. That price action should look something like this. HCTI provides like a this is HCTI. And if you look at February, So this is the February 20th. So see this right here, February 19th. This is February 20th OPEX. This is almost a perfect example of what this should look like for SPY or SPX. So they plunge down, hit the target, right? For the for SPX right here. I'll show it to you. It's right down here. 6475. So you're like up here today, plunge down tomorrow on quarterly OPEX, right? Get dragged down into quarterly OPEX, and then an unclench. So if you look at this now here, what you end up doing is we tag that pin, and then there's an unclench here. And I want you to pay very close attention to what this date is right here. This is February 26th, 27th, right in here. And before we even get to the roll, right, we're already selling on a high up here. So whether it comes on the 26th of March or the 30th, you'd be expecting something. Let me go back down here and show you this. You'd be expecting something like a super ramp up here and then some kind of hedging to the downside. And then what happens is you get the knock-on effect of dealers chasing those negative flows that sends us even lower over here. And this is where you close the door to this downside. If you can get down deep enough, even when dealers no longer have to follow those hedges, like, hey, we've chased these negative flows. Now we're going to counter trade it, right? We don't want that to print, of course. So you'll see like a little bit of effort here from dealers, right, to get back to neutral. And then they don't care if we blast down here. So just pay attention to these mechanics as we move forward into tomorrow's expiry. The end of the day today is more of like just a quick end of day trade, but more importantly, on a larger time frame, just be aware that you're likely still going to get this hedging flow to get to the downside over here, or best possible price to for the next leg of this downside. Now let's take a look here at the close. I got deleted everything. I do this shit all day long, so it doesn't fucking matter. But I get stinky about it sometimes. So into the close here today. What time is it right now? Is it almost 3 o'clock finally? Just want to make sure we got the new 4-hour candle going. Oh, sorry about this. We're going to start right here with the weekly or the monthly. I'll make this really, really fast here. Oh, sorry. This is, we're going to do the week or the month. Do the month. This is the downside target right here into tomorrow. This right here is the JPM collar down below. So without the capture trade, the capture trade, I'm going to give you the expectations today and tomorrow without that included. And then I'm going to give you the contra trade for if it turns around before the close today. And we can watch that if it happens. If we see the turn back up, we can take the trade to the upside. Well, it hasn't happened yet. It shouldn't happen until like 2:30 to 3:30 in the afternoon. We just want to watch it. We want to monitor it for a turnaround to the upside. I'm not watching at the moment. Be careful because whenever I'm doing this at the end of the day, shit happens and I'm not paying attention to it. I'm paying attention to this other shit. So let's go to the week here. You don't need to care about any of this right now. This doesn't matter right now. So I'm not going to do the work for you. This is all that matters right here. And this would be the gap that gets closed if we do close the gap to the upside. So we'll draw this up here into tomorrow if we do squeeze up into the close. This will be red right here. We know that's a gap, so we probably want to write that it's a gap in there. Wait a minute. A little bit less opaque. Yep, there we go. And we'll write gap over here.
Israel's Prime Minister Netanyahu says Iran has no capacity to enrich uranium or make ballistic missiles after 20 days of war.
Oh, fuck off with that bullshit. Iran doesn't want to fucking enrich uranium. That's bullshit. What is with this guy? This guy's like extremely fucking. Leave that there. Here's a 4-hour over here. Let's go back and look at this daily really quick. I might have missed something. We're extremely bearish close here, of course. On the 4-hour here, here's your 4-hour candle. Just so you can see it, this is your 4-hour candle right here. We're pounding down, pounding down, pounding down.
$100 billion for a fund to buy manufacturing firms.
This 4-hour candle will turn into a daily close here, shutting the door on the bulls. Put this one right here. We're going to leave this as a 4-hour for now, for tomorrow. Then we're going to go to the 1-hour right here.
So more from this Wall Street Journal article. Jeff Bezos is in early talks to raise
I'm going to leave this kind of like that, just so we know that it's there.
Manufacturing companies and seek to use AI technology to accelerate their path.
This would be the idea here that you get this.
Largest asset managers in order to raise.
All right, we're going to turn this guy off.
News disconnected.
This guy's pissing me off more and more, so I can't. Dude, stop that. I'm going to draw where we should go into tomorrow, which is down here, but I'm going to give you contra trade into the close as well. This is 1600. This would be where I would expect us to bounce, is somewhere down here, a new low to trade this tomorrow. So I'm going to draw this just like this right here into this bell. I think it's, nope, it's right here. Right there, I think. Let me just check this really quick. What was that? Where's that? That 1 date gamma. Trading 65.74 right now, right? It's this gap right here. Hold on here. It's the close from yesterday. Where's yesterday's close? Wednesdays. Right there. Yep, it's right here. Oh, hold on here. Just gonna get rid of that. We don't need that. Right in here. So I'm going to leave this here right on the expectation for tomorrow. Let's look at this closely. Right in here, right at this close. And then what we should do is sell this open down here tomorrow. Where's Friday at 9 a.m.? I'm on a 1 minute here. Hold on. Christ. Come on. Why am I having so many fucking problems down here? Hold up. All right. This is fucking pissing me off here. See something just like this. Crank, crank, crank. Having issues again today. It's like crank, 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 crank. And then tomorrow during cash market, straight down right here. This should be like a bloodbath in here. By 12 o'clock, it should be done. Now remember that this is going to be down. Way is lower. Just like this right here. Forget this gap. Don't need it. Should be something just like this. Push down, up, and then rocket to the downside for tomorrow. So this is your expectation. Now, I want you to remember here that this down move right here is as valid as this one right here. This could stop at any point. This could stop up here. Right? And then down and down. If you follow your rules, if you're following your rules here, you shouldn't be chasing this down unless we start breaking down to new lows. You then chase that down. But for right now, we should be cranking up into the close and then down here into tomorrow. So these are the expectations. Now, this is the contra trade right here. What time is it right now? Is it 3 p.m. yet? We're fairly close here. Now, this is the contra trade. Okay. Save this. And if we were not inside of this, OPEX nonsense, this is exactly where we'd be tomorrow at 9 a.m. Right down there. And you can just see it right in here. There's one. You can just see it right in here, right into the close tomorrow. Like all the way down, down, down. $1,600. Oh yeah, keep squeezing, baby. I already know you're gonna be squeezing. I already know what's up with this. Keep on squeezing. Keep on pumping, baby. Now this is what it should be for tomorrow. But due to this fucking DivX shit, I've got us like cranking up here and it's bell and then down. So just note that this is what it should look like here. This is your 1 minute rejection, right? Or 1 hour rejection. This 1 hour buy close should turn into resistance to the downside. But we're, like the big giant sucking sound. We're underneath the half-hour trigger. We're underneath the hourly trigger. Still to that downside, okay? I will post for you the contra trade inside the Discord. And what? Where's 1600? 1600 right there. We'll go back and look at this right now. But I think it squeezes. I think it's going to rip faces right onto the bell tomorrow. You don't actually have to sell until 9. One time I saw it start selling at 8 a.m., but normally they'll hold that shit right. So you have to be like the record holder, the on record holder of owning SPY on the day. So I think you have to own it at 9:30 in the morning. So we should be up until this is where I think we're going, way up there. But you have to be the record holder at 9:30 in the morning. I think it's not like 4 a.m. is not good enough, so they dump it like right at 9:31 is when you should see like the rampant selling coming on. We're gonna go right here. Oh, yeah, it's already going up. Sweet. This is a huge trade. It makes so much money. It's fucking ridiculous. It makes bank. Now you can get out at 4:15, or you can stay on until 9:30. It's like pick your poison kind of a thing. And we should just ramp here. It should just be like ramping rampo-rama into the close, ramping overnight, ramping into 9:30 in the morning. So just be aware of the trade. I've told you about it a few times. You guys know about this. Some of you have known about this for a long period of time. This is called the DivX capture trade. Be very wary. It should like skyrocket, like vertical into the close. If you remember earlier this morning, I said for you to watch out for 230 and between 230 and 330. We start getting weak right in here. Right at this 230, we start getting weak, and then it turns around and traps in all these fucking bears. And then it just moons to the end of the world. And it won't stop. It'll just keep going. You should not, there's no reason you should miss this up move. I've been talking about it. I talk about it every quarter. I talk about it before we get to the day that it happens. I will alert you in advance. Or maybe you're not in our Discord or something. I apologize if you didn't catch it. Hopefully you weren't short. And we should start ramping up into the bell here. Like rampo-rama. Like it's almost like it's very vicious. You'll see. No one talks about this trade. It comes from VolWiz. VolWiz noticed a few years ago. He noticed that some kind of he's like, I don't know who it is. Like, I think it's a hedge fund. He's like, and what he thinks is that a hedge fund comes out on this day every quarter, the day before quarterly OPEX, and it starts out bullish and then it looks really bearish. And then what happens is it turns around, and what he thinks is happening is he thinks that these hedge funds are coming in, they're scooping up all of this SPY, and this is a fight between option sellers and this DivX caption group. So right now, if you're an option seller on the quarter or in the month or in the week, You're watching this price action and you're panicking right now. You're like, oh, fuck, don't let this thing go any higher. Now I have to dump equities, and they scoop them all up. So this is insane, because what happens is they take the shares away from people. It's like a two-part trade. It's like, so like this option sellers are dumping equities to keep the price down, and the hedge fund is buying the option, and then you get your SPY underlying taken away from you in the overnight. And these guys collect the dividend, and then these guys come right back in and dump the fucking shares right back on the market right at 9 a.m. They just want to be the record SPY holder for the dividend for the record holder. That's it. So just be extremely careful as we come into this close. It should fucking not. It should literally. I'm warning you guys. If you don't know about this trade, it's like violence to the upside. And it doesn't stop. It doesn't stop until the 9:30 in the morning. It's really violent. You'll see. You don't need me to tell you. I've told you enough times at this point. Just keep watching it very closely. Remember this trade too, and I can't take credit for it. I did learn. I used to know all about it back in the day, but it's been like I don't even bother anymore. This is all you need to know. This is really all you need to know. But I did look into the technical aspect of it years ago, and Volwiz was correct. So I can't take credit for this being my own thing. Not that anything is anybody's. Like something's always taken from somebody else anyway. So, but credit does go to him. Starting to trade 661.19, 661, and check him out too. By the way, if you ever see like Volwiz out there, he does. He's a member. He's a moderator in our Discord, partner of ours, and so check that guy out. He's super fucking cool. But go up here and do this one here. Do this one up here, and we should be cranking. We are at this point closing the gap on SPX. You already saw that I had this written in, but I'll show it to you right now. I already had this drawn in, and we're closing this gap right now. I really would not be shocked to see any of this closed. This would not shock me. That it, like literally fucking super cranks. But this is a pretty good place here. Hourly trigger for a pullback and maybe one more rip higher to 67.16. Just be aware of it. And not only that, oh, there we go. Yeah, baby, keep doing it. Oh, dude, Volwiz tuned in today. What's up, motherfucker? I just saw you, dude. Yeah, dude, I'm pumping you up, man. What's up, Volwiz, baby? What's up, motherfucker? Yeah, boy. Cranking. I tried telling them, dude, this morning. I'm like, you'll make $20,000 off this trade. They're like, no. I'm like, okay. No problemo. You want your free internet money? It's right here. Volwiz is in the Discord right now. The DivX, the dividend capture trade, SPY, free money in the stock market. Nice little pump up here. Let's see if we can carry this over into tomorrow's open. We are trading right now up into the half-hour trigger on SPX. Dude, we tried telling them, Vol. They don't listen, do they? Then they get their faces ripped off. Same thing with Vixpiration, duder. Like rare. Yesterday, I saw one mention about Vixpiration. One from this Susan something or other. And I was like, she's the only fucking person that said we should be down yesterday. And I'm like, yesterday they were like, oh, it's because of the Iran. I'm like, no, it isn't. It's fucking Vixpiration, dude. Like, get out of here with that shit. Fucking, just tell them, because it doesn't make good news. It doesn't make good news. Spoos, what are you doing, Spoos? Crank it, baby. Green Vegas was long. We're cranking right now. There's good money here. DivX capture trade. Thank you, Volwiz. Thank you, Scotty. We love you, brother. We told you from this morning. Just wait around. You guys saw me on breaks. I'm like, I'm just gonna keep taking a break until we get to that fucking that capture trade. I'm like, there's no fucking point. Like, why tell these people this, or why bother with this until it actually starts happening? Yeah. Yeah, what you want to do is you want to sell the open like right at 9:31, like bam, sell it. A lot of people get out of this trade at like 4 p.m. or 4:15, but what you do in the opening bell is you just fucking sell like 9:31, sell. And you're gonna get like a bunch of dumping of SPY into this opening. Typically, I'm just telling you what typically happens. Now this trade, every once in a while it doesn't happen, so you got to look for the turn. Like, you have to literally watch this all day long, and then you have to look for like the breakout right here, like wham wham, and then right there you're like, here we go, we're going up. This shit is like, it's like bread and butter trade, bread and butter. Right on, Chaz, brother. Chaz just did a trade for 200%. You wait and see, boys. It's gonna fucking cranko-rama in here. You know, everyone's assigning news to shit, and this shit's all mechanical, man. This shit is all fucking, like, I was watching yesterday when we were, like, I had a bunch of calls on right when the rate decision was announced, so I'm like, I was up like a bunch. And then we stalled, and I'm reading the notes, and I'm like, I gotta close this fucking thing. And we got sucked back down into the close yesterday, and I'm like, this is all OPEX. I'm like, we're getting, like, you can't get sucked back out down into like the OPEX mechanical trade. This is part of it right here. Well, it's not really part of it, but it's part of it. And we have 11 billion in buyback into this close. 11 billion. I kid you not. Like, have to buy back 11 billion in equities into this close today. I'll give you the exact number. It's 10,995,557,058 worth of buyback into this close. It's huge. It's fucking huge. Then you got the dealers in on, like, the dealers have to do that. And then you got the hedge funds that have to do it or want to do it to make the money. And it just amplifies. Everybody's on the same trade going up, and you as a retailer, you get to jump on board and ride this fucker up. It should keep going, guys. We're not done. Like, this thing should fucking moon. Like, it literally should, like, go all the way up into the bell. This should not stop. It should, like, relentlessly ramp into the close. We'll have pullbacks and stuff, but it should ramp up into the bell until like 4 p.m. It should be pretty brutal. 1 minute trigger coming up to the hourly right here. It's likely not done yet. Just keep like, if you're going to buy back in, just use your same rules. Buy the 1 minute trigger, buy the 5 minute trigger, keep cranking it all the way up. These are your resistance points here. Here's your number 1. Here's your number 4. Oh, right there. And then you've got another target above. You've got 669.47. Just keep on keeping on. Here's your 1 hour to hold right here. Put this right here for you. Look at that nice squeeze up there. Gorgeous fucking squeeze. This was our target if you want to see it. We already hit it, but I think we're going to go higher. Oh, fuck yeah. Yeah, do you have the I was looking at the most shorted stocks earlier, Dr. CS. a whole bunch of most shorted stuff. I have one in front of me, but I don't know how accurate it is. Shopwell 325 is like it'll forever be on my radar. it's like a bread and butter trade. It's every fucking quarter. Not every. It's I want to say out of the last like 10 quarters, it's done this 8 out of 10 times. So it's fairly consistent. You basically run the trade every time it comes up, and if you fail, you fail. But the payout over time is fucking money. It's like it's one of the gravy trades of the year. 4 times a year too. 4 times a year you get this gravy trade. Yeah, it doesn't pay every time. It 100% doesn't pay every time, but it pays enough times. It pays with an edge. It pays like 8 out of 10 times, so it's a big edge trade. And you can easily see the turn as it happens. You can see it right in here. You can see it happened right in here, the turnaround. It's not done going up either. It ain't done. It's not going to stop until the open tomorrow. Or I shouldn't say that. I should say historically it's not done until 9:31 a.m. tomorrow. It'll fuck shit up the whole way up. These guys have to hold these shares until the opening bell tomorrow. So they're not going to dump shares on you right now. They should theoretically. I keep saying this like it's not gonna, but like they're definitives, but theoretically they're going to want to hold the shares until the open tomorrow. So they should support this. Even though option sellers want to sell into this, they're going to be overrun by dealers and by the people that know. Let's keep watching this closely for more uppies into the bell. You do have maybe a little bit of weakness coming into 3:30, so you be careful, or not careful, but just watch this right here for like a little bit of doom and see if they start buying this back up for the next half an hour. Just be aware of time here. Yeah, it works about 80% of the time. What do you got? You got it? Oh, you fucking stud. So I just want you to know if you're in the Discord, right? So just a heads up that this is the actual list right here. So this list right here, this list that you have, this list specifically, this is the list. What you want to do is, let's say you have let's say you have Thinkorswim, or you've got Webull maybe, where you can put up like 30 charts or 12 charts or whatever. First, look at all of the tickers on that, usually the top 5 or 10, and you make yourself a grid for the morning. If you see like crazy buy flows at 4 a.m., those will usually ramp the fuck out into the open. They're good for a really quick, nice hit. A nice hit for the upside. You can usually make some really good money between like 4 a.m. and 10 a.m. Big money. Then monitor for anything that doesn't move in the early morning, 4 a.m. If those start ramping and get big volume buybacks, you can chase those all day long tomorrow. And then if any of that list does like a sell tomorrow, so be patient on the bell, like 10 a.m. If you start seeing some of those get sent down to fucking the depths of hell, you want to check those on Monday. And on Monday, they should start rising, and they should start squeezing themselves next week. So that chart that that list that he posted is something that is you can trade it for like days, like to a week. Very valuable. And that came from a Bloomberg terminal. That's the actual white paper that he posted. I was looking for it earlier. I couldn't fucking find it, man. I was routing around for it and couldn't find it. So I thank you, Dr. CS, for posting that. Dr. CS is aware of these trades as well. This most shorted stock trades into quarterly OPEX is buying back to short again. As a matter of fact, if you have no experience with that, so we just did this one, right? Or this one. If you've never had any experience with the most shorted stocks in the QOPEX, you don't have to trade it, but just watch the charts on those stocks tomorrow and look at the behaviors that they exhibit and take notes for the next quarterly OPEX. And so you get so you're like, Cap was telling me this and telling me that. I couldn't quite understand it. You'll understand it if you look at those stocks from like tomorrow morning at 4 a.m. and then check on them again next week. And you'll see the behaviors that they exhibit. You'll probably get more price action on those stocks than any others. I think it was HIMS on that list or what? Let me just check that list really quick. I'm surprised HIMS wasn't on this list. Oh, it is on this list. Yeah, it is on this list. But they got MBIS, IREN, Reddit, ASTS, HIMS, Rocket Lab, USO. Matter of fact, USO, I would like to look at that one personally. Let me just check USO really quick. USO could fucking move. Oh, it's already moving? No, is it already moving? It's already moving to the downside. Yeah, short the fuck out of USO. Look at that. That's what I was thinking. Like, short the fuck out of USO. It's been so up. USO should get fucking shanked into tomorrow. That works in the inverse, too. If, like, USO has been cranking over this war stuff, they will send that fucking thing down to the hurt locker tomorrow. It should not go to zero, but it should fucking trade like $97 or something when it's done. And it's already been selling today. So just check out that list that Dr. CS posted. If I wasn't streaming, I would be all over that list. Take the time that is required to monitor that list. It's great trading for end of quarter, especially. The reason I bring that list up too is because oftentimes like SPX will be pinned in, like you'll get the move at the beginning of the morning and then it does nothing. You like another couple notes here, like top line kind of notes. So, like tomorrow, if we go up tonight, tomorrow we'll like sell the open straight down and we'll flatline all day long. And then maybe you get a ramp up into the close. There'll be a time period where like the indexes will just be boring. Like tomorrow's stream, like quarterly OPEX streams are usually one of the most boring streams. And people are like planning and plotting and they get annihilated. And meanwhile, like you're just watching paint dry all day long. Same thing should happen happen tomorrow with like the paint drying thing. So just be aware of that tomorrow, too. If any of you are going to take tomorrow off, I can't blame you. Tomorrow's a good day to do a 3-day weekend. It really is. You could waste your whole entire day. And you got to remember, too, that like it's where options go to die. So if I've murdered one side of the chain, I want to go over and murder the other side of the chain, right? I want to take as much money as I possibly can. If I'm in a room, and there's an option on one side of the room and an option on the other side of the room. They're a person. And one's big and fat. And one's really skinny. And I'm the dealer. Who am I going to take to the woodshed? Who am I going to harvest? I'm going to harvest the fatty over there in the corner, right? The one with more meat in its bones. So take a look at that stuff tomorrow. It can be very, very juicy. Especially on like highly shorted stocks. Like the most shorted shit that's out there. Or something that's completely overperformed for the quarter, can usually get you some big ups, either tomorrow or the next few days. Watch this into 3 p.m. We get 3 p.m. doom. See if we can catch this for the turn up into the bell. Just waiting for this This 3 p.m. flows, and then try to take this bad boy all the way up. Remember that the half hour matters in here. You get the half hour trigger, or the 5-minute trigger meeting right now to the hourly trigger. You can draw these in if you want. Here's the buy right here. This is where the dip buy is. If this begins to turn around, we can jump on it too. You'd be looking, if this turns around, you'd be looking for a new high and then a back test right here, and then you can take the rest of this trade up. But in fact, you probably want to wait for this 3 p.m. and then take it lower. Just hang tight here, be cool. This is also the half back trade right here. See if we can catch the turn right here. Just waiting for 3 p.m. or excuse me, 3:30. 3:20 or 3 or excuse me, 3:35 right now. Hang tight here. I got to answer this phone call. Hey guys, just give me like a few minutes here. I got to take this phone call. I will draw this out for you so that you can follow along with it. Hang tight, guys. I'll be right there. I drew it in for you. Sorry about that. I had to take this phone call here for a minute from a contractor. I apologize. Whenever they actually do call you back, you have to take it because they disappear. So just waiting. I was trying to tell you here, you want to wait for this 5-minute trigger right here. This is what you want to see. Just be patient down here. Don't do anything. You now have the marked bottom. If you guys follow rules, right? So watch this closely here with me, okay? Watch this closely. You're gonna watch this. See this prior high right here. You need to put in something that you can mark. So right there we have it, right? So what you're looking for is a bounce on the 5-minute trigger. You want to beat that new high, and then you can take this trade up just like this, okay? So watch this closely. Don't do anything just yet. Just waiting here. Sorry, hold on. I might have to take this for a second. You guys throw the fucking rules right out the fucking window, don't you? Don't throw the rules out the window. So you just want to watch. You want to watch this closely here, right? Now you have your prior high now, right? You have what you think is your prior low, or we think that's the bottom, right? So what do? You mark out what you think, not what you know, what you think is the low right here, right? And you're looking for, it's always the same. When I tell you like you want to sit the 2 new highs on the daily trigger, it's the same thing on the 1 and 5. So you're looking for the first high to be this one right here. Like this works on every time frame, right? So you want to see the new high right here. That would be your first high. Then you want to see the second one here to take this out. And then what you do is you buy the back test right here. Okay? You get rid of this really quick. So you see the first high right here. You need to hit this first one. You break that high. And then you're going to do this one right here. Here's your second high. And what'll happen is you're going to buy this ramp into the close. Now, if that fails, if we don't hit this mark and that mark, you don't take the trade. If it begins to roll to the downside or anything like that, like let's say this thing falls apart, like, well, Kep said we're going to go here and we're going to go here and then we're going to go here, and I'm already long. There's not a big winning percentage in here. So what you need to do is wait for this to happen to get long, okay? So you don't execute the trade yet. So you've marked your bottom. You're looking for the 2 new highs. You have your prior high right here. You have this one right here. You take that one out, and then we're down and we're out of here. So just watch this closely, okay? It's going to come a little bit lower right there. Doesn't need to go that high. Just needs to go right about there. And then the dip buy is right here. right in there to take this one out. You guys, kill me. So marked bottom. We think this is going to hold. And we wait to execute the trade. Now, there are savvier traders. Like, there are traders out there, but I can't do this in the live stream because you guys are too far behind. But there are other traders out there. There are people that'll trade like a 10-second chart right here. They'll trade a 10-second chart right here. They'll trade a 10-second chart right here. They'll even trade short to this 10-second chart, and then they'll take that trade if it holds. This is a 1-minute chart currently. And remember, this thing just pushes over here. You know, this thing just moves until it happens, or if it happens. Just moves over. We can grind around here. I know, we're degens. What rules? I know, like. Well, I was only saying that because someone was like, his mic is off. We need to know when to go long. And I'm like, chill. Like, I'm like, it's the same fucking rules every day. Nothing's changed. It's all the same shit. It's like same shit every day. Yeah, I like Green Vegas. I like closing it at 4 o'clock, man. Me too personally, bro. I like closing it at 4:15. I've actually haven't, like, sometimes we'll ramp up into the bell and they don't ramp it until between 4 and 4:15. But I do like being out of the trade by 4:15. I'm not really I rarely hold overnight. Every once in a while I'll take a degen overnight trade, but it's still rare for me these days. We don't do any of that anymore. This market doesn't this market is not like it used to be. There used to be a lot of good overnight trades, but not as many as there used to be. You just want to see this one tick right here. Still haven't hit it yet. We need to hit that new high in here. I should have just made this one big thing because it looks all wonky now. A little bit cleaner. What is that? There's 4:15 over there. Looks like garbage. You get the gist. Just watch this closely here for this fucking tag and this one up here. You get the idea. My fucking crayons don't look good today. My crayons aren't that good. Who's short oil? I think natty gas is a good short. And oil into tomorrow, or today, or into tomorrow. I think it's a good fucking short into like the fucking beginning of the or at least the 26th, 27th or something to the end of the month. Let it all reset so they can short that shit again. Crank it, crank it, crank it, baby. Come on, Spoos. Crank it into the close, baby. Crank it. Start that big green fucking burr all the way to the bell. Keep on going. Buy it all back. Bring that up higher. Still no new high. Watch out here. No longs just yet. Need to see that new high. Still don't see it. I'm just get rid of this for now because it's a pain in the ass. Still waiting for this high. It still has not happened. Be patient. This might be it right here. You might get it right here. And plus, this 5 minute still hasn't come up. I'd really like to see this 5 minute come up. I'd like to see this 5 minute get up to the half hour to provide the oomph to go higher. Get that 5 minute momentum on that half hour momentum. Start fucking moving. Remember, we need to take this one out and take this one out right here. Start buying back tests after we take them out. Where's 350? Hey, we're almost at 350, almost there. See if this 350 will give the unwind, unclench we were looking for the last 10 minutes of the bell. Have the finger on the trigger ready to go. And start ramping. I think that was the tick to buy personally, but be patient. Be patient. Now we're above the 1 minute trigger. Need to get above this into this bell too. There's another mechanic going on here. We need to get above this into the closing bell. If we stay underneath the half an hour and hourly trigger, I'm fairly bearish into tomorrow. If this does not squeeze into the close, if we don't get this squeeze up, there would likely be a pretty decent short into tomorrow, but we're not there yet. So just be patient. You'd have to wait until like 4:15 or 4:14. We'll see where we are at 4:14 and see what's up. If they pin this fucker into 4 p.m., there's probably a nice put for tomorrow you can grab on the close. But I wouldn't put that put on until either the 5 minute and half an hour are lost or we're stuck underneath at 4:14.
1 minute remaining for the market on close inbound.
Nothing to do just yet. If anything, you're just looking for the long up. You're looking higher until the close. If we can't get above SPX 662524.50, If we cannot get above SPX 6624.57, we'll look to the downside into tomorrow.
Ten seconds.
10 seconds until MOC.
Market on close imbalance. S&P 500 sell side 15 million. Nasdaq 100 sell side 12 million. Dow 30 sell side 8 million. Mag 7 sell side 5 million.
I'll post this in the Discord for you. This is the start of the MOC. It'll change at the end of the day. You don't know that already? Just be patient here. Don't do anything. Just hang tight here. Watch this right here. This is the 350 for MOC. Still waiting for this to happen to get long. Dun, 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 dun. Don't do anything. No selling, no buying. Just hang out. Just keep sliding that over. Still no trade. This might be it right here. Hang tight. Still unable to get up there. Being pinned in right now. And I think with it happening like this, I think we're going to get the bump over tomorrow. I think what we're going to do is get the bump over in the overnight. It'll be a 9:30 sell. Just keep watching. Don't do anything. Don't sell this yet. We have plenty of time to sell at 4:15 if we need to. It's still above the 1 and 5 minute trigger, so don't fuck around. Still bullish here. I'm going to get ready to go long here.
At 4:05.
Oh, don't fucking run away on me, asshole.
2026 earnings. Estimated EPS $4.11. Estimated revenue
661. What about for tomorrow? What about tomorrow calls? Tomorrow calls. Oh, they're pricey. Fucking A, they're pricey. I fucking... What delta's that? Jesus Christ. Like 664 is a 26.27 delta. That's $1.05. That's still pricey as fuck. Okay. Let's do it. I'm in. I'm long. Let's see what happens between now and 4:15. See if we can get this up and over into the 15-minute here.
Total money market fund assets rose by 38.68 billion to 7.86 trillion for the week ending March 18th, according to ICI.
I'll stick around for 4:15 here. I'm gonna figure out if I hold this overnight or not. It's a 4:15, so I'm gonna be sitting around here anyways. Just a note that Q or SPX is closing under the half an hour and hourly trigger right now. Pretty bearish into tomorrow on that SPX. Still long, bro. I ain't going nowhere. You ain't got no stops to take in here on me. I fucking do my stops, bro. Sorry.
Right now in 5 minutes time, expecting the FedEx Q3 2026 earnings.
Let's watch this into 4:15.
Estimated revenue 26.46 billion.
Still watching this to see if we can get it to happen into the close. If I can't get this by 4:15, I'll get out, but I want to see that one get taken out. Still long. Hey, buddy. Check the 30 on the 15.
The RBNZ to hold news conference with April 8th OCR review.
30 minutes strong. I think I'm going to stay long here into the close for tomorrow. This is an important key level right here. And key velocity, too, for more ups.
Shortly expecting FedEx Q3 2026 earnings.
I'm going to be all honest with you guys. I want to close this at 1:15, but if I can't, I'll stay long on it.
At 9 a.m.
I would need to see a roll like price action like this into 415 to get out, take some puts for tomorrow.
The RBNZ to hold news conferences for all OCR decisions.
Keep on smashing, bro. Get up there.
The RBNZ says governor's speech to address impacts of Iran war.
Just slap the fuck out of it. Hit it. That's a good touch right there. That's good. That's good touch.
$5.25, a beat on the estimate of $4.17.
Should see a nice move up here in a minute.
A beat on the estimate of $23.49 billion. FedEx sees fiscal year adjusted EPS at $19.30 to $20.10, previously seeing $17.80 to $19. Federal Express revenue $21.15 billion, a beat on the estimate of $20.58 billion. Freight revenue $1.99 billion, a miss on the estimate of $2.03 billion. Operating margin
Operating margin. Oh my God, that sounds like toilet paper.
With FedEx raising fiscal year 2026 earnings outlook, seeing adjusted
FedEx moving higher right now.
$1.62 billion, a beat on the estimate of $1.37 billion. And FedEx seeing fiscal year capex up to $4.1 billion.
I think I'm going to stay long and tomorrow.
$5 billion compared to the estimate of $4.31 billion.
I'm staying long into tomorrow. I want to see the smash to the upside. We'd really have to go big green into this close. Well, I guess there it is right there. There's one. If you can hit this fucker straight up here, if you can hit this fucking thing all the way up here, I'll get out. If you do it before 415. If you don't, I guess I'm stuck. Come on. Keep going. Keep going. Keep fucking going. Keep ripping. So excited.
According to U.S. trade representatives, Japan to identify specific
This needs to be just above that right there.
And manufacturing products in U.S. and Japan and other countries.
Come on.
To discuss trade
Do something.
Support a resilient critical minerals marketplace among parties to a
I need a stick.
plurilateral agreement.
Hold on. And oh, wait a minute, that's wrong.
The U.S. Japan to focus.
Maybe I'll start doing this every day.
On select critical minerals, with Japan release Critical Minerals Corporation Action Plan.
Be a thick line, like that. Kind of like turn it around.
FedEx shares rise 2% after the bell following results.
Come on, do something. Well, that's gonna be brown. Oh, there's no brown in here? How the fuck is there no brown? Does nobody like brown, the color brown? How about an orange stick? Come on, do something. Come on, do it. Go up there. Come on, you can do it. Get up there. Come on, get up there. There you go. Give me green bar. Fucking. Come on, you can do it. Push, 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 push. Get up there. Whack, whack. Push your ass up there. Let's go. Move it, private. What are you doing during the day? I watch this guy and he makes a stick and he pushes it. It's like, give me another green bar. He yells at it all day long. He just tells it to go higher. Come on, you can do it. You can do it all night long. Jeez, look at FedEx already taking the money back. I fucking love FedEx. Such a good fucking stonk. I know FedEx well. I've owned it well. I don't even know what the fuck is going on in there. Man, keep on pushing, bro. This is like the longest 15 minutes. Still got 4 minutes here to see if we can get a pump into the close here. More money. That's not enough. Higher. Higher. FedEx didn't help. I think I should leave him on. I think I'm going to leave him on for tomorrow. I think we're going to get it on the open, so I'm going to leave this on. Pray for me overnight. I think I'm going to leave him on. We didn't do this. I figured we'd go up all the way up into the close. We're not doing that, so I'm just going to leave this on for the overnight. Hopefully they don't start selling. There's danger, though. I want to warn you that we are underneath the half-hour trigger into this bell on SPX. So when we get into cash market tomorrow, that fucking velocity is going to want to kill the market. I'm looking to sell, I don't know, 6,700 or something. If we can rip it up there. I don't know how high it's going to go, but I'm hoping that it goes pretty high here. It's a pretty dangerous trade. The calls are for tomorrow, so watch me get murdered all day long and they'll trade it at the end of the day.
In a joint statement, Japan agreed to up to $73 billion in US investments in small modular reactors by GE Vernova Hitachi, as well as natural gas generation.
Commence fucking bombing with Japanese jets over over Iran. Fucking Trump today, I was like mortified listening to him say that shit. I'm like, dude, that's for me to say, not for you. I was like, I'm not the president of the United States. I can say that, but you're the president, dude. Remember that one time when you bombed Pearl Harbor? Like right in the fucking... She was like, what did he just say? Even the reporters were like, oh, what did he just say? Staying long here into the close. I'm not going to close them out. See if we can get a pop up into the tomorrow's bell. Okay, I'll see you guys tomorrow at 9:30 in the morning. I'm going to warn you now, if we get pinned in this fucking market tomorrow, like we make a move and then we just sit there all day long, I'm going to go do some work. And I'll come back for the trade at the end of the day, but just be warned out there that tomorrow, like some top line stuff for tomorrow, okay? That's right. Keep going up. Keep going up. Some top line stuff for tomorrow. Shit might go against you, and you don't know why. Unexplainable price action to you, especially if you're a new trader. Number two, your shit might get stuck tomorrow where it doesn't move. There's like all kinds of expect the unexpected tomorrow on quarterly OPEX for most of you. Like if you're on sell side specifically, you want to lay off the market until fucking closer to like the end of the month, like 26th, 27th, 28th, 29th, 30th. If we start rolling over before we get to the 31st, you can start considering putting a hedge on. But I want you to be like, if you're in sell side, just like lay off a little bit, and you need to, because when all of these traders are closing their trades, they're going to be back to execute new trades. It's not yet.
500 closes below 200-day moving average for the first time since May 9th.
Bulls, you have to wait a bunch. You got to wait until we're in better positioning. If you're like trying to execute 3-month trade or something, you got time on your hands. But if you're on sell side looking for that killer price action again, I missed the whole trade down, bro. You're going to have to be patient again and wait for the actual roll. What else? I think, yeah, just tomorrow, just be patient. Like tomorrow, be careful tomorrow. If you're like, if you have like this grand master plan of what you're going to do, like, you know, this, I'm going to rule the world with this. This is probably not the day tomorrow to be doing that. No hindsight trading on tomorrow. I shoulda, coulda, wouldas, all that kind of stuff. There's a lot of moving parts tomorrow, and you can get really fucked up in those moves. I've given a lot of money back on OPEX days, a ton. Like, it's going to go do this, and then all of a sudden it goes against you, and it's just you're getting annihilated. Same with the squeeze up and in the day today. Like, we're going down, bro, and actually you're going to get your stops taken out on the upside. So be patient tomorrow. It's quarterly OPEX. Congratulations if you're still in the market and you haven't lost all your money. Even myself, I've taken a beating this week. So if you're losing money out there, I've lost some money myself out there this week. Most of my losses this week are failure to launch. Not even wrong way, just like not getting started, that kind of stuff. So just be patient for a major inflection point on the down or on the high. This is not the place you want to be fucking around. You can give all your money back to the market. Don't want to be doing that. And I'll see you guys tomorrow at 9:30. Have a great weekend, and I can't wait to see y'all then.